Hey, hi guys, this is Arpita Tulsyan here. I am here with the uh, altogether different topic for November 23 students and onwards. This is in regards to the foreign trade policy for your indirect taxes paper. And yes, this is the new foreign trade policy 2023, which is effective from 1st April 2023. Uh, what I have done is we already have the notes ready with us. Okay, these notes are made from your ICAI module, ICAI a resource basically, which has been released recently by the ICAI. And from this, whatever are the important things, whatever are the relevant things, almost everything has been compiled in these notes in a simplified manner. Okay, in a simplified manner, so that it becomes very simple, even though its weightage is around 4 to 5 marks. But still, even if you do it once, even if you listen to the lecture once and then refer the notes, it will definitely become simple for you, and you will be able to retain the things. Okay, because most of the students ask that 4 to 5 marks, should we put this much of efforts for that? But I would say that if your target is exemption, or if your target is obviously something more than the exemption also, then yes, we have to do everything, and I'm just telling you to do it once. Yes, just listen to the lecture once, and you will be thorough with it. Yes, I hope we can start with it. Sure. Now, we are going to talk about FTP 2023. Before this, we had FTP 2015 to 2020 that got extended till 31st March 2023. And after that, from 1st April 2023, we have this FTP 2023. Okay, and this is relevant for our examinations. One more thing I would like to tell you: generally FTP policy comes for a period of 5 years. Okay, this FTP 2023, what they have put, okay, the clause that they have put is this is going to be applicable without any sunset clause. Okay, means there is going to be no last date till which the policy, there is no such last date which has been notified by the ministry till now. So till the time they further amend it, etc., till that time, or till the time they bring a new law, till that time this FTP 2023 is going to be continuing. I hope I am very clear till here. Yes, can we proceed ahead with the content part? Okay, now let me tell you a small thing from exam point of view. Okay, FTP is divided into two parts. First part of the chapter is going to be the basics, introduction, general discussion, general topics. Okay, second part of FTP, which is going to talk about some promotion schemes, export promotion schemes. Some kind of schemes are going to come in the second part of the chapter. Okay, now from exam point of view, honestly I can tell you the second part is going to be relevant. So for the first part, we will be covering everything, but in a overview manner, in a quick manner. Okay, and that much, and in that also, if there is something which is relevant from your exam point of view, which can be tested in your MCQs, I will be placing a special focus on it. Yes. Okay, fine. Let's start with it, everyone. Unit 1, see your, the first part which I was talking about. Unit 1 talks about your introduction to the FTP. Okay, now what do you mean by FTP? First of all, yes ma'am, full form we know, full form is foreign trade policy. Now this FTP is nothing but what? It is nothing but a set of guidelines. ठीक है, एक तरह से एक policy बना दी है, एक policy बना दी है, which has been given by the central government. Okay, which has been given by the central government, which discusses the provisions relating to import and export. Okay, now you will say that ma'am, even custom law talks about import and export. Yes, it talks about import and export. FTP, foreign trade policy, is going to discuss about import and export on a very broad level. Okay, but at the time of application, at the time of actually doing the transaction, you have to make sure that you check the provisions given under FTP also, and then you also check the provisions of customs. Okay, so FTP is going to be a policy which is going to talk about your import and export transaction, and that is going to be speaking at a very broad level. Okay, now ma'am, what is the purpose of this FTP? Now, can we say for import-export transaction, or specifically if I talk about export transaction, the main purpose of our country is to earn some foreign currency from the, or foreign exchange from the other country. That is one of the most important purposes, monetarily or financially. And another basic purpose of doing these transactions is globalization. Right, because we just don't want to restrict our transactions only till our border. Okay, it has to go cross border to stimulate those transactions, to increase those particular transactions. FTP policy has been introduced, and that's why import and export has been given such importance. Okay, so the provisions relating to import and export, again I am repeating, provisions relating to import and export, tell me, that is going to be covered at two places. One is in the FTP, that is the foreign trade policy, and the second one is going to be in the customs. Very clear till here? Okay. Now, which law is going to mainly discuss about your or which ministry, which government, which department is going to come into picture? Okay. Now, when I talk about foreign trade policy, first of all, it is going to be it is a central law, right? It is a central law. It is a central policy. So the most important authority is going to be the central government. In central government, which ministry, ma'am? So there is going to be a Ministry of Commerce and Industry. As you can see here on the board also, everyone, there is this Ministry of Commerce and Industry, which governs the affairs relating to promotion. Means they are trying to promote these type of transactions. Okay, now this foreign trade policy 2023, the policy which we are talking about, this is notified by the government. You already know this is notified by the central government. If I am talking about central government, means which ministry am I talking about? Ministry of Commerce and Industry. And this has been notified because of the powers given, in a act, that is under section number 5 of the Foreign Trade Development and Regulation Act. Okay, Foreign Trade Development and Regulation Act, we can simply call it as FTDR Act 1992. Okay, in this particular law, under section number 5, power has been given. Okay, power has been given to that Ministry of Central Government to notify such a policy. Are you clear with this? Yes. So the most important act which regulates your foreign trade policies, etc., is going to be your FTDR. I hope I am very, very clear till here. Yes. Acha. Now, just try to understand. Now, ma'am, what is the work? Like, what is the work of that ministry, or what is the work of the central government in regards to foreign trade policy? So, they are going to control the foreign trade. See, there are some such type of goods which should not be exported, or there are some type of goods which should not be imported. Okay. Similarly, there are some countries with which India may prohibit you to do such transaction. So all these will be decided by whom? All these will be decided by the central government. Okay. In central government, which ministry? It is the Ministry of Commerce and Industry. Ma'am, in ministry who works? So there is a person called as DGFT, or there is an authority called as DGFT who is appointed. That is Director General of Foreign Trade, who is appointed for the purpose of doing all these things. Very clear with this? Okay. So whenever there is, any announcement regarding import policy, you must have heard or seen on the TV channels, right? Whenever there is any, changes in the import policy, changes in the export policy, or something new has come up in relation to your international trade, prohibiting, restricting, allowing import exports, all these things are done by whom? All these things are done by the central government. Okay, these are the pointers which you need not by heart. Okay, I'll tell you, there will be some answers where I'll tell you, okay, please remember 2-3 points from your etc. So I'm just going with a basic discussion. Very clear till here? Okay. Then after that, let's go into the details. So till now, what we have understood, everyone here on the board. So till now, what we have discussed is the most important government is going to be the central government. Within central government, you are going to have your Ministry of Commerce and Industry, right? Okay, this ministry has been given powers from section number 5 of the FTDR Act, right? And the person who is going to be actually doing all the things is the authority called as DGFT. This is the hierarchy that we have studied till now. Okay, we are talking about Foreign Trade Policy 2023. Can we proceed ahead, everyone? Yes. Okay. then after that, going to the next thing. Now, this foreign trade policy, as we already discussed, this foreign trade policy is going to talk about your international trade. That is, it is going to talk about imports and the exports. Earlier, okay, earlier this policy was called as the EXIM policy, EXIM, EXIM policy, export import policy. But now it has been called as the foreign trade policy. Okay, and this policy they keep on updating, because it cannot be very purana type, it cannot be very redundant type of a policy. It has to change along with the the patterns which is being developed in the country. So changes are made in the policy every now and then. Chalo, theek hai. Then after that, let's move ahead to the next part. Second thing is going to talk about salient features of FTP. Okay, salient features of FTP. Here I'll tell you to remember a few terms. Okay, here I'll tell you to remember a few terms. Just try to understand, everyone. Again, this is very general, but we'll come to know about some terms here. Okay. Now here they are telling that whenever we are talking about any import and export transactions, so see, import of transactions or import of goods, and similarly when we talk about export, they have classified it into three types. Okay, one is it can be freely done, bindas karo, theek hai. Next one is restricted, and the third one is prohibited. Okay, now freely you understand, because there are no restrictions on it or there is no permission required for doing import and export of those goods. Okay, now I am talking about the two things. One is your restricted and another thing is your prohibited. What happens in case of restricted? Prohibited means you cannot do. आप कर ही नहीं सकते, आप इसको import export कर ही नहीं सकते. Okay, you cannot do it at all. But when we talk about restricted means it can be done. Okay, it can be done, but only after taking some approvals. Okay, so FTP is going to give you that list, that whether it is freely allowed or it is totally prohibited or it can be done subject to some restrictions. Are you clear with this? Acha, then there are some transactions or there are some goods in which we cannot deal. Okay, example, or in which we cannot deal directly, but those transactions can be done only by the government. Okay, example, if I talk about oil and gas, or if I talk about petrol, very simple, very basic example. Okay, if I have some contact in some, Arab country, and if I want to import petrol from there because it is cheaper there, can I directly import petrol? Answer is no, because those transactions have to be done. First, those transactions can be done only through the government enterprises. Okay, and here the government enterprise is called as state trading enterprise. STE, state trading enterprise. Okay, so there are example, there will be some transactions. Okay, there will be some products like, some specific medicines. Example, corona vaccine. Okay, you were not directly allowed to import from the other country or export to the other country, but the transaction happens through the government, and those enterprises are called as state trading enterprises, right? Because, government cannot give everything freely to you, like, okay, you deal in any particular type of good. No, that is not allowed. Okay, example, weapons. Example, your, nuclear weapons kind of a thing, or defense related products. Government cannot give 100% in the hands of the public. Okay, so there will be some transactions which are free, some restricted, some prohibited, some which can be done only through the government. Okay, now we'll not call it as government, now we'll call it as state trading enterprises. I'll mark this term here on the board for you, everyone. Can you see this? Yes, state trading enterprises. Now, another major reasons of this FTP is government, can we say, it wants to promote exports. Yes, so government is going to come up with many schemes, many promotional schemes, that you do this export, we will give you this benefit, or you do this export, we will waive off your taxes. If we get such type of incentive, then definitely we will be motivated to do exports. So the second part of the chapter which I was talking about, that is various schemes, those schemes are also given under your FTP. Okay, similarly, many a times it happens that you say that, sir, I need you'll tell to the government, sir, I need some big machinery from the other country so that I'll do the manufacturing here in India, and then we can do some exports. So when you import that plant and machinery, capital goods, whenever you are importing, government will give you the tax benefit on it. Okay, how the tax benefit etc. will be available, we are yet to do that, but these are the things which are specified in your FTP. Okay, authority will be set in the FTP, in the foreign trade policy, that who is going to look after all these things. Then it will tell us which goods are allowed, which goods are not allowed. Okay, which can be done only through the STE. Then what benefits are you going to get if you do exports? What benefits are you going to get in taxes? Okay, when you do these exports. I hope I am very, very clear with this. Yes, so these are some of the salient features of FTP, or we can say content of the FTP. So here they are going to talk about your, see, this free, restricted and prohibited things. Okay, then we have discussed about the STE. We also have the paragraph again coming on STE later. Okay, then exports are promoted through various promotional schemes. We will get some duty exemption or duty drawback, as you have already studied in your customs. Capital goods can be imported. There will be some ifs and buts and Q and Y and etc. Okay, but there will be such type of provisions which have been given to us in the FTP. I hope I am very, very clear till here, everyone. Yes, okay, and just like I told you, this foreign trade policy 2023, this became applicable from which date? From 1st April 2023, and this has come without a sunset clause. Okay, sunset clause means there is no deadline given, that it is not given that this policy is going to expire on so and so date. Okay, so this policy will continue till the time something new comes into picture. Very clear with this? Okay, now let's go ahead to the third part. That is your administration of FTP, that is who administers. So I hope you can give me the answer now. Who is the most important authority to administer the FTP? It is the central government. Within central government, which ministry? Ministry of Commerce and Industry. And within this Ministry of Commerce and Industry, because they have been given the powers to make this FTP, they have authorized a person called as DGFT. Are you clear with this? So DGFT is basically an authority. It is going to have offices in different parts of India. Okay, and its headquarters is at New Delhi. Very clear with this? Okay, so DGFT, ma'am, so what is the role for DGFT? Now suppose if I wish to do some import transaction or I wish to do some export transaction, for that I will need some authorizations. Those authorizations, those permissions will be given by whom? Those permissions will be given by the DGFT. And yes, one more thing which they have given here in the introduction part itself, that is whenever you want to do any import or export transaction, just like in income tax we have PAN, in GST we have got the GSTIN etc. Similarly, in case of FTP we have got IEC, that is importer exporter code. Okay, this number you should be having. This is just like your identification number for the purpose of FTP. Very clear with this? Yes, so everyone, unless someone is specifically exempted, everyone is required to take this IEC, and this IEC will be given by whom? This IEC will be given by the DGFT. Very, very clear till here, everyone? Okay. Then going ahead, everyone, let's go ahead. Now next thing is, this is talking about your exemption from policy or procedures. Okay, now what they have told is, we know that foreign trade policy 2023 is nothing but the policy which talks about your import and export transaction. So we know that FTP is going to be applicable to everyone, right? Whatever is written, whatever is mentioned in the FTP is going to be applicable to every importer, every exporter. Okay, but can DGFT in public interest, can it give exemptions to any particular person? Yes, it can grant some exemption, it can give some relaxation, it can give some relief from the provisions of the FTP. I think this is common ना, this happens in every law. हर law में ऐसा बोला जाता है, चलो वैसे तो आपको पूरा law applicable है. Okay, normally पूरा law is applicable to you, but कभी कभार उसमें से exemptions दे देता है. ठीक है? Similarly, it is applicable for your DGFT also. Very, very clear with this? Yes? Okay. Now, apart from this ministry that we have studied, who are the other authorities? Okay, who are the other authorities who are involved here? So, one person who is involved here is your CBIC. Okay, what does CBIC stands for? Your GST wala. Okay, Central Board of Indirect Taxes and Customs. That is the authority who is involved, because customs is also going to come into picture here. Okay, next person involved here is RBI. I think I need not even tell you about this, because foreign currency will be involved, exchanges will be involved. That's why RBI is also going to help us here. And the third person who is going to be involved here is your state GST departments. Just like your old VAT departments were there, they got converted into your state GST departments. Those are also going to assist us in the FTP, because when we go ahead, we'll see, you know, ultimately your GST, customs and FTP, everything is linked here. Okay, Acha, these three authorities, you have to remember this. Okay, maybe a question can be formed on this, so just remember this. I hope I am clear till here. Can we proceed ahead, everyone? Yes. So till here everything was general. Okay, everything was general. We mainly studied about the authorities. Okay, the hierarchy that is there. Then the basic features, overview of the things which is going to be there in your FTP. Okay, policy is applicable from which date? That is one thing that we studied, and the other authorities who are going to assist us for the purpose of FTP. Very clear? Okay, then going ahead, next thing. Okay, next thing is something that you need to understand once. Okay, even if you're not required to remember it, but you need to understand it once. Okay, I'm also going to tell you one new term which is going to come up. Now, next one, fourth one, that is contents of the FTP. What all things are going to be there in your FTP? So, one is your FTP, basic policy. Okay, this basic policy notified by the central government with effect from 1st April 2023. And this policy is divided into 11 chapters. Okay, means the bifurcation of the policy has been done into 11 chapters. Okay, then along with this policy, they have also released something called as Handbook of Procedures 2023. Okay, handbook of procedures. Now, policy will talk about the law. Okay, then how to implement it, how to apply it, the procedural part of it is going to be mentioned. Okay, the procedural aspects of the policy is going to be mentioned in the handbook. This keeps on changing from time to time, and this is the above policy was basically talking about the law. Okay, and this handbook is going to talk about the procedures. Okay, one important thing which is going to be there in this particular handbook is something called as SION. SION. SION stands for Standard Input Output Norms. Okay, Standard Input Output Norms is going to be mentioned in this handbook of procedures. Okay, just like we studied about STE, State Trading Enterprises, on the previous page. Now here we are going to study about the SION. Okay, now ma'am, what do you mean by SION? I'll just give you a very simple example. Now let's say I want to manufacture a pen. Okay, and that too a 4-color pen. 4-color pen I want to manufacture, and after manufacturing this particular pen, I want to export it to the other country. Okay, can we say finished goods is going to be this one product? Okay, but for the purpose of this, I say that, okay, this outer part of the pen I will get in India only, but I need some good quality refills from a particular country. Means I want to import from a particular country. Okay, so now can I say for this one pen, I need to import 4 refills from the other country? Okay, now can we say input is going to be 4 refills and output is going to be that one pen? Yes. So in this handbook of procedures 2023, they will normally give there. Okay, they will normally write there that, okay, if you want to if you want an output of one 4-color pen, then input is equal to 4 refills. Are you clear with this? So input output ratio will be specified in this procedure. Okay, another example which I can give you is, let's say I want to export this kurti. Okay, I want to export this dress, I want to export this kurti, and in the handbook In the and for the purpose of this kurti, for manufacturing this kurti, I need some good quality cloth which I need to import from the other country. Okay, normally, let's say I'm just giving you a very general example. For one piece of kurti, 3 meters of cloth is required. Okay, so it will be mentioned in this handbook of procedures that okay, for one piece of kurti, 3 meters of cloth is the input that is required. So that is called, this is standard. Okay, this can be plus minus. Now let's say we want to prepare maybe a triple XL size, then maybe you will require 4 meters of cloth, or maybe I want to make that kurti for a small girl. Okay, for that maybe you'll require only 2 meters of cloth. Okay, but so standard will be specified in this procedures. Ma'am, what is the use of this SION? That we'll study it later on. As of now, just understand that for many products or for majority of the products, SION will be specified in this handbook. So that you can, whenever the government is allowing you to import that raw material from the other country, then the government is satisfied that okay, you have not imported more or you have not imported less, you have imported as per the SION. Now let's say I tell to the government I want to export 100 pieces of this kurti. Then if it is specified in the SION, then can we say government will tell me, okay, no problem Arpita, if you want to export 100 pieces of this kurti, then you can import 300 meters of the cloth. Because 1:3 ratio was mentioned in this SION. Very clear till here? Yes. Okay. So this was the second content. First content was your basic policy. Second content is your handbook of procedures 2023. Third one is your ITCHS. Okay, ITCHS classification of export and import items. What does this ITCHS stands for? ITCHS stands for Indian Trade Classification Code. Okay, Indian Trade Classification Code based on harmonized system of coding. Okay, now whenever in customs also you have got this, in GST also you have got this classification, and then a particular item will be specified, its rate will be given, and all those things you have already studied. Okay, but for the purpose of FTP, in this classification system, they haven't given you any rates, etc. That if you import, then what rate will be applicable. No, for that you can just go and refer your customs. Yes. So ma'am, what is given in this classification then? So what they have done is this ITCHS codes will be divided into two schedules. Schedule 1 is going to talk about your import policy, that the rules, guidelines about the import of goods will be given under the first schedule, and export, what all things can be exported, what cannot be exported, for which you require the authorization, etc. That will be given in your schedule 2. I hope I am very clear till here everyone. Yes, and this ITCHS also includes a SOMT list. Okay, this also includes a SOMT, SCOMET. Full form of it, you can just come to the next page. You will find it on the next page also, everyone. Here it is, SOMT. Okay, I'm just referring this for the purpose of full form. That is your special chemicals, organisms, materials, equipment, and technologies. Okay, ma'am, what is so special? What is so special about this SOMT? Why is it mentioned like separately in your ITCHS? Okay, now this SOMT is basically those materials, those items which has dual use. Okay, one is your good use and another one is your bad use. Okay, now if I talk about some special chemicals, okay, chemicals can be used for the purpose of, business also, like for the purpose of it is, put in some product, or it is used in some machinery. But at the same time, can we say chemicals can be used to make your bombs also? Right? So can we say chemicals can have good use also, and chemicals can have some destructive use also. It can be used to make some nuclear weapons also, right? Same thing applies for technology also, time bomb, right? I'm just giving you an example. Okay, so that technology can be used for manufacturing or producing a software here, but at the same time it can be used for some destruction also, right? So what has the Indian government done? Indian government says that in the SOMT list, we have notified some items that for these items there will be some restrictions. Because if you start exporting, imagine if you start exporting those special chemicals or those technologies to the other country, and the other country misuses it and misuses it against India only, then it is so bad. Like we have only exported them, and वो हमें ही उड़ा रहे, right? They are destructing us only. So in such cases, government says that you cannot deal into these transactions freely or in these goods freely. And that list is given under SOMT. So ma'am, what is the difference between STE and SOMT? SOMT is not that only government can do. Okay, STE was something that only government can do. SOMT is something, the product which has got dual use. So government has put some restrictions on it. Very clear till here? Yes. So that SOMT list is also provided in this ITC HS. Very clear till here? So 3 things covered in your FTP. First thing was your policy. Second thing was the handbook of procedures. And third thing is your ITC HS classifications. Clear till here? Yes. Then going ahead to foreign trade policy vis-a-vis tax laws. Now here they are basically talking about the first thing which I have already discussed. Ma'am, if we are doing import export, then which law are we supposed to follow? Are we supposed to follow FTP or are we supposed to follow customs? What are we supposed to do? So I have already mentioned FTP is given on a very broad level. ऊपर से बता देगा allowed है, allowed नहीं है. And then when you actually get into that particular transaction, when you actually do that transaction, is it actually prohibited or is it actually restricted? If restricted, whose permission is required, etc. All those things will be specified in your customs. Okay. And yes, one more important thing, if at all there is any difference of opinion between FTP and customs, then always customs is going to override. Okay, because FTP, again I am repeating, is very general, is very broad. It is just a policy. Okay, but in customs they have given everything in depth and customs law is going to override the FTP. Very, very clear with this? Okay. Then after that, going to the next point. Okay, we have completed the contents of the FTP. Now I am going to the next one. Next one is not really important. Scope of FTP, like what all things are covered in this FTP. So yes, export promotion schemes. Okay, export promotion schemes will be covered in this FTP, which we are going to do in the second part of the chapter. General provisions about import and export, just like we did about DGFT, we did about IEC, importer exporter code, all those things will be discussed about. Then we will also have an overview of your EOU, export oriented units, EHTP, STPs and all those things. Okay, then there is a concept called as deemed exports. You must have already studied, but yes, there is a concept called as deemed exports. We are going to study about that under FTP. We have already studied rather about the SOMT, right? Then what if there is a quality dispute? Whenever we are importing any goods or whenever we are exporting any goods, there can be a very high possibility that there are some quality disputes regarding the goods that we have imported or exported. Who is going to deal with those problems and all those things? Everything, the solution of everything, I should say, solution of everything is given under your FTP. Okay, so here they have just, remember FTP was divided into 11 chapters. So here they have just given you chapter wise, like what thing is covered under which chapter. Please don't remember this. Okay, don't remember this. I hope I'm clear till here, everyone. Yes, can we proceed ahead? Okay. Then going to the next one, that is the 6th one, which talks about very general point again, which talks about trade facilitation and ease of doing business. Okay, now since India is already fully into your international trade, so if we want to promote this international trade, see, telling everything on papers or making a policy for it on papers is very simple comparatively as compared to its implementation. Okay, policy तो बना के रख दिया, import करो, export करो, बिंदास करो, foreign exchange लेकर आओ, etc. You have made the policy. Making the policy is simple, but then when it comes to implementation, it becomes very difficult. Just like we prepare a study plan, but then sticking to it, implementing it is more tougher than making a plan, right? And that's the point. That's the catch. So similarly, here also they are telling that, okay, so what we will do is for, implementing such policies, because the policy is really good, but for implementing such policies, we need to simplify things for importer and exporter. Okay, for that purpose, they have prepared, they have constituted and a committee kind of a thing which is called as NCTF, where NCTF stands for National Committee on Trade Facilitation. As you can see, National Committee on Trade Facilitation. And now what they will try to do is they will try to make things simple for the importer and exporter. Ma'am, how will they make things simple for importer and exporter? So can we say, first of all, they will try to reduce the time which is taken in the procedure. Okay, that is the biggest thing. Okay, if say for example, if my cargo, if I've imported something from the other country, then its release time will be reduced. That is the time for clearing the goods for the purpose of home consumption. For that, they're trying to reduce the time. Similarly, at the time of export, you have exported the goods. Okay, the goods are lying on the port. They have not yet onboarded the ship. Okay, so they are trying to reduce the time. If they're trying to reduce the time, then definitely the other party will receive it early, will receive the payment early, and it is going to be a smoother transaction. And then when there is a big problem whenever we are exporting any perishable goods. Okay, whenever we are exporting any, let's say, perishable agriculture produce, for that there are so many authorities to whom we have to submit so many documents. So now they are telling that we will bring something called a single window system. That is, just go to one authority, complete all your formalities there, and you are good to export. Okay, because otherwise the products are going to get perished and we are not going to get any value for it, right? Then another thing, they have started this website also, that is dgft.gov.in, where all the information, all the details will be available regarding the FTP policies, procedures, everything. So you can just go to their website, you can check the laws. Okay, then similarly they say that they have taken many IT initiatives, so in the efforts to make everything paperless, contactless, and if we are going from paper to paperless, then definitely it is a sign of improvement. Then they say that they have also established a 24/7 help desk facility, that if any particular exporter sorry, is facing any problem in filing the applications or forms online, then they say that we have this 24/7 help desk facilities. And similarly they say that we have brought many such measures, we have introduced many such measures, because of which doing trade between two countries becomes very, very simple. Okay, so these are some trade facilitation measures which have been taken under FTP. Okay, let's recollect a few points here, everyone. Okay, export and import clearance will be faster. Okay, then single window for perishable agriculture produce. Then many IT initiatives have been taken. Help desk, 24/7 help desk have been established. They have made this portal dgft.gov.in. Okay, and many such trade facilitation measures have been taken by the Customs Department. Yes, so these are the measures which have been taken for facilitating, improving the trade under the FTP. डन डनाडन डन, समझ में आया यहाँ तक? यस, सिंपल है, एकदम जनरल चल रहा है. ओके, एवरीथिंग इज जनरल टिल हियर. See, if I tell you to do this on your own, I am 100% sure you are not going to do it. Okay, मतलब वो नहीं हो पाता. Then after that you remember that okay, this is 4 to 5 marks. Should I be putting so much? But if we do it once in the class, then हाँ ठीक है. After this, even if you don't revise these parts, it is absolutely okay. Yes? Okay. Okay, so let's go ahead. What did we complete till now? We completed till that point of trade facilitation and ease of doing business, 24/7 IT and all those things we have completed. Okay, chalo, now let's go ahead to the next thing. Now the next heading, as you can see here, is something called as Authorized Economic Operator, AEO. Okay, now this is basically a title, a status which is given to some type of people who are engaged into international trade. Okay, now let's say, acha, this was under the program of customs. Okay, this authorization was given by the customs law. Now what they are telling, if there is any particular business entity, okay, if there is a particular business entity which is engaged into international trade, regularly import export ये सब कुछ करता जा रहा है, then in such cases if it is approved by the customs, okay, if it is approved by the customs law, then that person will be given the status of AEO. And if customs has given that status of AEO to any particular business entity, means they are treated as if they are trusted partner of the trusted trade partner of the Indian customs. Okay, means those are such business entities who have been compliant with all the norms, who have been, doing proper import export, and so they have got this authorization from the customs called as authorized economic operator. Okay, ma'am, what is the relevance of authorized economic operator? That will come to know when we do the schemes. But as of now, we are just studying about the status given. And ma'am, what is the benefit? If suppose I am being called as an authorized economic operator, then what is the benefit of it? Then for that purpose, less examination will be done, because those people are treated as the trusted partner of the Indian customs. Then their applications will be processed in a faster manner, their cargo will be cleared in a faster manner, etc. These are the benefits, because they are regular people. Okay, they are regular business entities which are engaged into international trade. Okay, and what status did they get? They got the status of authorized economic operator. Okay, now let's go ahead to the next one, that is something called as towns of export excellence. Okay, what do you mean by this? Towns of export excellence. Now what they have done in India, they have selected, okay, they have selected some towns, just like cities, towns, districts. Similarly, they have selected some towns which are contributing in a very beautiful manner to the इंडियाज एक्सपोर्ट्स. ठीक है, ऐसे कुछ टाउन्स उठाए जो इंडिया के एक्सपोर्ट में उनका भागीदारी है. ओके, द पीपल हु आर कंट्रीब्यूटिंग टू दैट, and then such towns will be given the status of towns of export excellence. ठीक है, यहाँ पे person, they have not identified the person who is contributing, they have identified the town which is contributing to India's export. Okay, so they will be provided with respective targets. Okay, now you have to finish off this target, you have to export this much, and for that purpose, government will be giving them proper support, government will be giving them proper infrastructure, so that their competitiveness is even more enhanced, और अच्छे से वो लोग काम कर सकते हैं, and now they have to export in a better manner, they will be able to export in a better manner. Okay, so in the above point, business entity was given the status of authorized economic operator. Okay, here that respective town is given the status of towns of export excellence. Very clear till here? Okay, then after that, going to the next one. Now this one is important. This is something that you have to remember for your exam point of view also. Okay, status holders is something that you have to remember for your exam point of view also. Okay, now listen, status holder, what has happened here? In case of this, these are your firms or these are your entities which are into export business. Okay, they are business leaders as exporters, and they have contributed heavily because they are into exports, they are the leaders, so definitely they are going to contribute to the country's foreign trade. Okay, so such exporters who have excelled in it and who have successfully contributed to the country's foreign trade, these will be called as, or these will be given some status. Okay, they will be given some status. And another thing is, these people have excelled so much that now they will be helping the newcomers in the market. Okay, new people who have come into this export, etc. These people are going to provide them the guidance. Are you clear with this? Okay, now ma'am, but what status are those people going to get? Okay, the people who have excelled, what status? So just like for hotels, we have the status, na category is there, 1 star, 2 star, 3 star, 4 star, and so on. Similarly, these exporters will be given some status here, that is, as you can see here, everyone on the board, 1 star, 2 star, 3 star, 4 star, 5 star. Okay, now we have to check that you as an exporter, you fall under which criteria. So now can you tell me, since these people have exported so much, means the status will also be given on the basis of export that they have done in the past, right? So now we will go and check their threshold exports done in the past years, in the past 3 years. ठीक है, पिछले 3 साल में, in the last 3 years, check how much export have they done. Okay, individually, respectively, for every year, how much is the export that they have done. Okay, if their export performance in US dollars in millions is 3 million, or I can say if someone's export performance for the last, all the last 3 years is 3 million US dollars, then that person will be falling in the category of 1-star export house. Okay, if someone's export performance is at least 15 million US dollar, then 2-star. Okay, 50 million USD, 3-star. 200 million USD, 4-star. 800 million USD in each of the last 3 years, then that person will be classified as 5-star export house. Okay, so based upon what? Based upon the export value, or can we also call it as FOB value, right? FOB of the exports done during the last 3 years. If you fall under the respective things, then you will be given that particular status. Are you clear with this? Ma'am, now what is the benefit? Like, why to classify, why to differentiate? Can't we say that, okay, everyone is a star house? Okay, everyone is a star house. Can't we say that? Answer is no, you cannot say that, because for that purpose, they have given some benefits to the respective status holders. Okay. Now, what are the benefits given? Everyone just try to understand. Okay. Now, what is the purpose or what is the benefit of the status holders? Now, before we go to the benefits, like kya fayda, 1-star ho ki 5-star ho, kya fayda? Before we get into that, let's try to understand a few extra points here. Now, we have to go and check the value of exports done during the last 3 years. Now, suppose if the value of exports is not available in dollars, we had to check it in $1 million, right? If it is not available in dollars, then please convert it, okay, as per the exchange rate given by the CBIC as on 1st April of that financial year. Suppose if you're checking for the last year, so last year ka 1st April, on that date, whatever was the exchange rate given by the CBIC, at that rate, please convert it and then check whether you fall under this criteria or not. Okay, another thing, this has to be checked for all the last 3 years. Okay, all, it's not any of the last, it has to be checked for all the last 3 years. Okay, suppose if I have got a status of 1-star, okay, and you haven't got any status, then I cannot transfer this status to you. Okay, so this status is totally non-transferable. Are you clear with this? Yes. Okay, then after that, one important point. Okay, this conversion thing, conversion thing is one thing which you can expect in your MCQs. Whose exchange rate are we taking? We are taking the exchange rate which is notified by the CBIC as on 1st April of each financial year. Okay, then this has to be checked for all the 3 preceding financial year, and this performance, this status is totally not transferable. Okay, now they have given some benefit. Everyone here, just try to understand. Okay, just try to understand. They have given, suppose if as of now I am not holding any position. Okay, as of now, suppose I am not holding any status, no star, nothing is there. Okay, but if I am having IEC, importer exporter code, and I am exporting under micro and small enterprises. I am a micro and small enterprises. I am exporting that. Okay. Or if I am a manufacturing unit having ISO BIS certification. Okay. ISO certified, etc. I am manufacturing unit goods under that. Okay. Or if I am any unit which is located in northeastern states, including Sikkim, Jammu, Kashmir, Ladakh, etc. means I am from that particular place, or if I am exporting fruits and vegetables. Okay, micro and small, ISO BIS certification, northeastern states, or export of fruits and vegetables. If I am falling under any of these category, then once in my lifetime, I will get the double weightage benefit. Ma'am, what do you mean by double weightage benefit? Okay, now let's say I am such a manufacturing unit which is having that ISO certification. Okay, I am such a manufacturing unit which is having that ISO certification. My turnover for all the last 3 years is equal to, let's say, 2 million USD. If I say my turnover for the last 3 years is 2 million USD, can I say I'm not falling as of now in any star export house? Okay, but because I am having that certification, or maybe say for example I was located in northeastern states, etc., then in such cases my turnover for the purpose of this granting will be doubled only for the purpose of this categorization. So since it was 2, now it will be considered as 4. Can I say if it is considered as 4 million USD, means I have been considered as a 1-star export house. Okay, and this is available only once and only for the grant of 1-star export house. Huh? It's not that, let's say as of now my turnover, I'm in northeastern state, my turnover is let's say 8 million USD. Okay, for that it will not be doubled. If it gets doubled, then it becomes 16 million USD, and then you cannot call yourself as a 2-star export house. No, this benefit is available when you are having no star. Okay, when you are having no star, and if you want to get the status of 1-star export house. Okay, this is once in a lifetime benefit given to those entities which are falling under any of these 4 categories, and as of now which are having no star, and by doing that double, they will be considered as 1-star export house. Very clear with this? Okay, fine. So this is basically the classification of your star houses. Do you recollect the export turnover performances? Yes, 1-star is 3 million USD, 2-star is 15 million USD, 3-star is 50 million USD, 4-star is 200 million USD, and 5-star is 800 million USD. Okay, if your export performance is this much during the last 3 years, then in that case you will be considered as these star holders. Yes, now the most important thing, what is the benefit? फायदा क्या इतना मेहनत किया? What is the purpose of doing so much of classification? Okay, now privileges of status holders. Okay, what are the privileges of status holders? Now, first of all, whenever they are going to get any authorizations, permissions, okay, that can be given to them on self-declaration basis. Okay, custom clearances, authorization means whatever documentations they submit to the customs authority, and if they certify it, okay, or if they self-declare that whatever I've written here is correct, on that basis, the procedure goes ahead. Okay, so self-declaration method works for them. Another thing, you remember somewhere we had studied about SION, SION, standard input output norms. Yes, for one kurti, 3 meters of cloth is required, etc. So SION, suppose if my product was not mentioned in SION, then I have to go and make an application to the DGFT. Sir, please include my product in your SION. Okay, so the authority will fix your SION within a time period, or fix your quantity, whatever is there, within a time period of 60 days. Okay, 60 days is considered as a priority. Normal में तो और बहुत ज़्यादा time होगा. Okay, normally they take even more than this. But if you are a status holder, then your SION will be fixed within a time period of 60 days. Okay, this is one important point that you have to remember. Okay, another thing, at the time of, this import and export, there are many documents. See, first of all, your banker is also involved at the time of your import and export, okay, for the purpose of remittances. Apart from remittances also, we are required to submit so many documents to our banks. Okay, but if you are a status holder, then you need not submit those extra documents. See, money that you will receive or pay, that will be through bank only, but extra documents, etc., that you need not give it to your bank. Okay, you have to give it to the other customs authority, etc., but no need to submit those extra documents to the banks. So that is another exemption. Can we say my paperwork has reduced because of this? Time taken will be reduced because of this, because you are a status holder. Okay, another thing, in some places we require bank guarantee which is to be given. So, but if you're a status holder, there is no requirement to furnish the bank guarantee. Yes, acha, 2-star and above. Okay, 2-star and above, they are permitted to establish export warehouses. You already know the meaning of export warehouses. If no, then definitely we are going to do it in customs also. 2-star and above status holders can establish their export warehouses. This is another point that you need to remember. Next point is 3-star and above. Okay, 3-star and above, they will be allowed. Okay, they will be allowed to self-certify their manufactured goods. Okay, many a times certification is required, na, that the goods are fit for use, goods are manufactured in India, etc. That certification. Generally, that certification is given by the certification agencies. Okay, generally that is given by the agencies, but 3-star and above can self-certify their goods. Wow, right? Okay, then there are some goods, okay, there are some samples, or for the purpose of your export promotion. Is, say for example, if you want to promote some goods here in India, we give free samples, etc. We sell it for free or at a very low cost, etc. Okay, similarly, if I want to promote my export, then for that purpose, I want to export some free goods. Generally, that is not allowed. Exporting goods for free generally is not allowed. But status holders will be given some benefit in that. Okay, they can export freely exportable item on free of cost basis. That is another benefit given to them. And yes, definitely preferential treatment will be given to all the status holders as compared to other exporters. Okay, because these people have been consistently exporting good amount or good value of goods outside the country. Are you clear with this? Yes. So please remember at least 5 points. This answer is to be remembered. I am repeating, this answer is to be remembered. याद रखना है, फिर आएगा तो बोलना नहीं, आ गया, ठीक है, मजाक था. Okay, at least 5 points. At least 5 points to be remembered here. First of all, sign is going to be fixed on priority within a time period of 60 days. Okay, then after that, compulsory negotiation of documents through banks is not required. Okay, mandatorily you have to go and submit it through the bank. No, not required. Okay, then after that, furnishing of bank guarantee, not required. 2-star and above can set up their export warehouses. 3-star and above can self-certify their goods. Okay, at least remember these 5 pointers from here. Very clear till here? Okay. These were your status holders and their privileges. Then after that, going to the next one. Next one is a very simple one. I think I've discussed about this also. Skilling and mentorship obligation of status holders. Remember, I just told you these status holders are the experienced persons. So they are going to provide the necessary training. Okay, they are going to provide necessary training to the trainees every year. That how to boost export, how to come into the category of the status holder and all that, because these people have got good experience. Then do you remember something called as towns of export excellence is something that we had studied. Government was selecting some towns which were contributing to the India's exports. Now similarly now they are talking about the districts. Okay, developing districts as exports hub. Okay, what do you mean by this? Means every district in India, okay, every district in India from where the goods are being exported, what are they trying to do? They are telling that, okay, please manufacture here in India. Okay, vocal for local, make in India, Atmanirbhar Bharat. Under all these schemes and under all these slogans, what they have done is every district wherever the goods are being produced and the goods are being exported, we are identifying such district. हम ढूंढ के निकाल रहे हैं कि इंडिया में ऐसे कौन कौन से districts है जहां से बहुत अच्छा contribution हो रहा है towards the export. Okay, so we have identified such districts, and these districts will be provided the necessary support. Okay, we will provide them we'll give them the necessary support, we'll give them the necessary help, we'll give them the necessary infrastructure, and so that these districts will be prepared for increasing the exports done from their respective districts. Yes, so those districts will be identified and they will be now called as export hubs. That is, from these particular districts, the maximum amount of goods are being exported. A very simple and a very raw example which I can give you is Ratnagiri district in Maharashtra. Right? If I'm not wrong, Ratnagiri district in Maharashtra, it is known for mangoes, Alfonso mangoes, etc. So those districts have been identified to export the goods. Very clear with this? Yes. And then going to the next one, quality complaints, technically the last one, quality complaints and trade disputes. Now I initially discussed about this, that whenever we are importing the goods, whenever we are exporting the goods, there can be a very high possibility that there is a dispute between both the parties in relation to the quality of goods which have been imported or quality of goods which have been exported. Okay, so we have to make sure that if we've got an export order, then we have to make sure that we are exporting good quality of goods. Okay, otherwise it will lead to a loss of goodwill, and then in future maybe you will not get export orders and all those things. So whatever, so for this purpose, what the government has done is it has formed a committee. Okay, it has formed a committee called as Committee on Quality Complaints and Trade Disputes. Okay, if there is any trade disputes or if there is any quality issues, then this committee will address all the issues. It will be responsible for questioning the parties, and then to provide a necessary solution and to resolve the grievances of either of the parties. So this committee has been formed for the purpose of resolving the problems. Very clear till here? Okay, and the last thing that is coming up here is your SOMT. I think I have already discussed about SOMT, that is special chemicals, organisms, materials, equipments and technology which have dual use. Okay, so India has entered into agreements with other countries also, that we are like they have prepared a list called as export control list, that some items which can be used for destruction purpose also, those will be either that will not be allowed or that will be permitted, but only after authorization and all those things. Okay, where did we study about SOMT? We studied about SOMT in ITC-HS. Na? In ITC-HS, you had Schedule 1 import policy, Schedule 2 export policies, and even the SOMT list was provided. Okay. Okay, so this till here, a particular part, not the first part, not the entire first part, but a very general part, some new terms, all those things comes to an end. Okay, and after this, you have got some provisions, some general provisions relating to imports and exports. Are you clear till here? Yes, everyone? Very general, very simple, very basic. Okay, so then let's go to the last part of the first part of FTP, that is your provisions relating to import and export. Here they are going to give us an overview of some restrictions, some allowances given to us in your FTP. Okay, this is divided into 3 parts, as you can see here on the board. Can you see the A part that is given up here? Yes, this A part, like we are going to have 8A, 8B and 8C. 3 parts are going to be there. Now, in the first part, they are just talking about the general provisions applicable. Okay, general provisions which are applicable for import and export of goods. So now we know that for in your FTP, they have given us the bifurcation that whether a particular goods is free, is it restricted, is it prohibited, etc. That will be given to us in your ITC-HS Schedule 1, Schedule 2. Sorry. And then it will also tell us that for which products the transactions can be done only through the STE, that is your state trading enterprises. Okay, if there are any restrictions, then DGFT can even put restrictions on you. Okay, if you need some permissions before doing the import and export, that permissions to you will be granted by the DGFT. In some cases, it can even so happen that it can put a condition on you. Okay, it can put a condition on you called as actual user condition. That is, the person who has been given the benefit, only that person can import the goods or only that person can export the goods. Sometimes it happens that the permission is transferable. Okay, just like we studied, that status holder, is that transferable or non-transferable? That is non-transferable. Similarly, the FTP can put a restriction on you that actual user condition becomes applicable. That is, the person who has been given the permission. Okay, the person who has been given that permission, the person who has been given that benefit, that person should only do the import and export. So that will be told by your FTP. So about all these things, the details will be given to us in our FTP. Okay, now there are some general provisions which have been given to us. Most of it we have already studied. First thing is about ITC-HS. I hope you already know this. I had mentioned that in customs and GST, wherever they have discussed about classification, it talks about the name of the product and the rate that is applicable, right? HSN and depending upon the HSN and all that thing. But here, for the purpose of FTP, this ITC-HS classification, Indian Trade Classification Harmonized System, this is going to give, this was divided into two schedules. Remember, schedule 1 which was talking about your import policy, schedule 2 which was talking about your export policy. So this ITC-HS is one of the important document which will tell us that what is allowed, what is not allowed for the purpose of import and exports. Okay, another thing, second thing which we have already studied is your state trading enterprises. That is, if we want to do some transaction in some specific good, then those can be imported or exported only through the STE. Okay, means you cannot directly do that transaction with the other country. Petrol, you cannot do the transaction directly with the other country, but that can be imported or exported, but only through a state trading enterprises. Very clear with this? Example can be your ONGC. Example, it's written here, I think. Yes, example is your Food Corporation of India, ONGC, and so on. Okay, these are some entities. These are some state trading enterprises which are, which can solely do the transactions for certain products with the other country. Okay, next thing is your importer exporter code. I have already discussed about this also. Importer exporter code is nothing but an identification number for the purpose of doing your import and export transaction. This will be given to you by the DGFT, and this is mandatory for every importer and exporter unless it is specifically exempted. Okay, and yes, this is PAN based number, so it is a 10 character alphanumeric number allotted to the entity. It is same as PAN. So it's not that if you have PAN means you have your IEC also. No, it is same as PAN, but it will be specifically allotted by the DGFT. Very clear with this? Acha, normally this goes on for once you have got the IEC, you can start the trading of goods, import or export of goods, etc. Every year you have to update the details in your IEC electronically. Yes, and if suppose you fail to do the updation in your IEC about the transactions done and all that, then in that case your IEC will be deactivated. ठीक है, तो एवरी ईयर उसको अपडेट करते रहना है. अगर अपडेट नहीं किया तो फिर वो डीएक्टिवेट हो जाए. Clear till here? Yes, this can become your MCQ question. Okay, IEC is a PAN based number which is mandatorily required to be taken by everyone unless specifically exempted. Yes, okay, then there are some mandatory documents which is required for the purpose of import and export. This you must have already studied, still I'll repeat it. For the purpose of export, see, commercial invoice everyone needs. Okay, then your lorry receipt, bill of lading, airway bill, that is one document that you need. And the next most important document is your bill of export or the shipping bill. Okay, you can remember it as shipping bill. Acha, for the purpose of import, the first two documents will remain the same. That is, commercial invoice is required, and your airway bill, bill of lading, lorry receipt, railway receipt, etc. that is required. Okay, and third, the most important document here is the bill of entry. There it was. In case of export, it was shipping bill, and here it is your bill of entry. Okay, these are the basic minimum documents required for the purpose of import and export. Apart from this, there can be many more documents which can be notified by the DGFT which you require for the purpose of import and export. Yes, shipping bill, bill of entry. Just remember this much. Then after that, going to the next one. Last one in this part, penal action and placing of an entity in the denied entity list. Okay, you must have understood from the name itself, penal action. Now let's say if we are not fulfilling the requirements of FTDR law, or if we are not fulfilling the requirements of FTP, or if we are not fulfilling the requirements of any other law which is relating to FTP, example customs, then in that case the person who was authorized to do this import and export, if such a person violates any condition, if he is not fulfilling any particular condition, or suppose any demand notice was issued on him, if he fails to pay that particular amount, he does any type of non-compliances, or whatever information that he has submitted that is not true, that is correct, that is incorrect, that is false, etc., then in such cases that person shall be liable for some penal action. Now ma'am, what penal action? So we don't have to study that. Penal action is given under FTDR Act, so that has to be referred from there. Okay, but in case of contravention, 100 बात की एक बात. Okay, conclusion. If there is any contravention done by such person under these respective laws, then in that case, that person will be liable for penal action. Okay, now listen. You remember this page? Yes, this one. Can you see everyone here on the board? This was the name of the authorities that was given there. Yes. Now DGFT was the main authority who was doing everything. Now DGFT can appoint some regional authorities within it. Okay, it can appoint some regional authorities within it to exercise its powers. Akela DGFT क्या करेगा? Alone DGFT cannot do everything, na? So DGFT will delegate its work to the regional authority. So ma'am, why did you mention it here? Okay, now a firm may be placed under this denied entity list. This is just like a blacklist. Okay, this is just like a blacklist. A firm may be placed under this list by the concerned regional authority of DGFT in the following cases. Okay, now example, if there is, if they want to deny you from any particular license, then they will put your name in the list, that in the denied entity list, that these people should not be given the licenses, these people should not be given the certificate, these people should not be given any kind of authorization. Okay, so it's like your name is put in the denied entity list. Whoever name comes in this denied entity list, they will not be getting any sorts of benefits. Okay, but later, suppose if you comply with their thing, if you fulfill their requirements, then your name can be removed. Okay, then your name can be removed from the denied entity list, and if your name is removed from the denied entity list, then you will be considered as a normal person, then everything will be allowed to you. Very clear till here? Yes, so this basically this was nothing but a blacklist kind of a thing. ठीक है, वो blacklist के अंदर अगर मेरा नाम आ गया है तो मुझे फिर benefits नहीं मिलेंगे. Okay, whatever was a license I was eligible for, authorization I was eligible for, new licenses, or maybe मानो मेरे पास I already had a license, and now if I want to renew it, then I will be denied from the renewal also. Such type of restrictions can be there. Very clear till here? Yes, this was the A part. Okay, this was the A part, which was general provisions talking about your import and export. So it spoke about your ITCHS, it spoke about the STE, State Trading Enterprises, then it was talking about your importer-exporter code, then the mandatory documents which is required for the purpose of import-export, and the penal action and the blacklist. Okay, blacklist is our wordings. Okay, denied entity list. Clear till here? Yes, then going on to the next one, that is the B part. Okay, that was the A part. Now going on to the B part. B part, as you can see here on the board, B part talks about provisions relating to import of goods. Okay, so C part is going to talk about provisions relating to export of goods. This is talking about provisions relating to import of goods. Okay, everyone with me? Okay, very simple, and but has to be read once. Okay, some MCQ pointers can come up from here, everyone. Now, in case of import of goods, the first point that they are considering here is actual user condition. Okay, actual user condition means what are they trying to tell us? I had already discussed about it. Now, suppose if there are any particular goods which are freely importable, then it can be imported. There is no problem in that. Okay, but if there are some goods which come up with an authorization, means that can be imported only after taking the permission. Okay, then in that case, the person who has applied for that particular permission after fulfilling some conditions, only that person can import the goods, and he has to fulfill all the requirements attached to it. Example, you were given the permission that okay, import these goods, and then you have to export it within a time period of 6 months. Then means if you have got that permission, so you have to adhere to that permission, and the same person is required to adhere to it. Okay, so it will be specified whether this involves actual user condition or not. Then next one is important, import of specific category of goods. Okay, now we are talking about import of samples. Okay, I'm giving an overview of it, everyone. Import of samples. Now let's say I want to export something. Okay, for that purpose I want to import some goods. Okay, before doing the final import, I wish to import some samples so that I get to see. ठीक है, देखने मिले कि भाई जो आने वाला है माल वो कैसा रहेगा. Okay, so samples import is allowed. One thing to be remembered, sample imports is allowed, but maximum kitna, how much? Okay, maximum up to 3 lakh rupees. Okay, it should not happen that you're importing samples worth rupees 1 crore, then it won't be called as a sample at all. Okay, so sample import is allowed. Duty free import of samples is allowed up to rupees 3 lakhs. Okay, subject to terms and condition, but you just remember as 3 lakhs. And there are some items whose import of sample is not allowed. Example, defense and security items cannot be imported. Seeds, bees and new drugs. Okay, this list, defense security items, seed, bees and new drugs, these cannot be imported. These needs authorization. If you want to import this, please take the permission. Very clear with this? Okay, then next one, import of gifts. Okay, import of gifts, they say duty free import of gifts is not allowed. If you want to import the gift, then in that case pay the necessary duties and then you can import it. Okay, but there are two things. One is Rakhi, okay, and the other one is life saving medicines. Okay, Rakhi and life saving medicines, these two can be imported. Okay, these two can be imported, there is no problem in that. But apart from that, normally they say that import of gifts is totally not allowed. Okay, that is totally not allowed. If you want to import, please pay the necessary duties on it. I don't know if you're aware about it or not. Definitely you must be aware. Sachin Tendulkar was gifted a Ferrari by Michael Schumacher. Yes, and he got it as gift, and he was also required to pay the duties on it, import duty on it, right? Acha, when you're importing Rakhi, okay, one thing that they're telling here is, if you're importing Rakhi and if the tax is applicable on it is up to rupees 20, up to rupees 100, sorry, up to rupees 100, then no duty will be collected on the same. Very clear with this? So by default, import of gifts through post and courier, that is not allowed. Exception, Rakhi and life saving medicines. Okay, otherwise if you want to import the gifts, then please pay the duty and then import it. Duty payable on Rakhi, if it is up to rupees 100, then we will not collect anything on it. Okay, it is not a Rakhi gift, it is Rakhi. The exception is for Rakhi and not for Rakhi gift. Okay. Then after that, import of passenger baggage. Passenger baggage, like whenever we travel outside, we have our suitcases, we have our bags, that is called as your passenger baggage. So import of passenger baggage is allowed. Okay, subject to, suppose if they have prohibited some items, then we have to see that. But otherwise, import of passenger baggage is allowed. Nothing more to be done in this particular paragraph. Okay, so two things done till now. One was about sample. Import of sample is normally allowed up to rupees 3 lakhs. Import of defense, security items, seed, bees, new drugs. For this, you need the authorization. Acha, import of gifts through post or courier is not allowed. Exception is Rakhi and life-saving machines, medicines. Apart from that, if you want to import, you can import the gifts, but please pay the duty as if you have purchased it. Then after that, re-import of repaired goods. You had some goods available with you, you had exported it because you wanted to get it repaired from the other country, and now if you want to import it, re-import it back, that can be done. Okay, then there was some project of yours that was going abroad. Okay, for that you had taken some material from India, some inputs and some capital goods was taken from India to the other country for the project which was happening in the other country. Now you use those goods there, and now if you want to bring it back again after the project has got completed, you can bring it back, provided it was used there at least for a period of 1 year. Means your project life was at least for a period of 1 year. Okay, then there is some prototype, some sample kind of a thing, some prototype to show something or to test something. If there was any particular prototype, if you want to import from the other country, that can be done. Then if there is any sort of metallic waste, scrap, then that can be imported back in the country, provided it is not hazardous, provided it is not waste, provided it is not toxic. Yes. Okay, then going on to the next one, last one in case of your import, everyone here, second-hand goods, import policy for second-hand goods. I'll give you one kind of a question that can be tested from your. First, let's try to understand this chart, everyone. Now here they are talking about second-hand goods. Okay, I hope you're able to see. Yes. Okay, so this is your second-hand goods. In second-hand goods, let's first talk about your capital goods. Okay, plant and machinery or plant and equipments, those kind of things. Okay, now here they are telling that 5 things. Okay, in case of capital goods, AC, diesel generating sets, DG sets as you call it as, desktop computers, okay, refurbished or reconditioned spares of refurbished parts of personal computers or laptops. Okay, refurbished spares of refurbished parts of computers and laptops. And last one, all notified electronic and IT goods. Example, laptops. Okay, here they had spoken about desktop computers. I can take the example of laptops, etc. Any other notified electronics goods. Okay, these are falling. These are considered as your capital goods. If you are importing this, okay, then second hand, if you're importing this, means these have been already used in the other country, then import of this is restricted. Okay, it is restricted, means it requires authorization and fulfillment of some conditions. You cannot simply import it. Okay, don't try to dump the second hand things into India. Okay, for if you want to import this, then it requires the permissions. Very clear with this? So import is restricted. And another thing, okay, see this, refurbished or reconditioned spares of capital goods. Okay, above it was refurbished or reconditioned spares of parts of computers. Okay, now it is of other capital goods for which an engineer certifies existence of 80% residual life. Means whatever was the original life into 80% is still left. Means it is not exactly a second hand, it can still be used for a longer period of time. Okay, that is free for import, you can import it. Okay, why? Because life is left, it can still be used here in India and any other second hand capital goods. So basically restriction in case of capital goods is applicable only for these 5 points: AC, DG sets, desktop computers, refurbished parts of refurbished refurbished spares of refurbished parts of laptops, computers, etc. and other electronic goods. Only these 5 are restricted, rest all is allowed, subject to rest all is allowed, and for these 5 you have to take the necessary authorization. Okay, then other than capital goods, this is the second part, other than capital goods. For capital goods we have already studied. For other than capital goods, they are telling that any goods which have been imported, okay, goods, these are not your capital goods, these are normal imports, any goods which have been imported for the purpose of repair, refurbishing, means you have brought it into India, someone was using it, now you have brought it into India because you're going to repair it, then no problem, you can freely import it. Okay, and for other goods, why to bring other used goods? So they are telling that other goods will be restricted. So other than capital goods, if you are bringing here for repair, no problem, but otherwise you cannot bring. Okay, and in capital goods, those 5 goods restricted. Very clear till here? Yes, it is talking about second hand goods only. Yes. Okay. Then after that, third one is a very general one. It can be ignored. It is talking about some miscellaneous provisions. Now here they are telling that suppose if you have imported some goods here in India and you want to export it, ultimately you want to same goods you want to export. So you can do the high seas sale also. Okay, even that is allowed. That is allowed under GST also. That is allowed under customs also, and that is allowed under FTP also. Okay, or merchanting trade means shipment of goods is from one foreign country to another foreign country. The goods are not going to touch Indian port. Okay, it is not going to touch Indian port, and but there is an Indian intermediary who is involved. So such type of trade is called as merchanting trade. Even this is allowed. Okay, this is allowed subject to certain terms and condition. Then if you want to import some capital goods under lease financing, even that is allowed under FTP. Okay, wherever bank guarantee is required, you will have to furnish that bank guarantee, bonds or whatever it is. Okay, so these were some basic miscellaneous points which have been given here. And then the last one here, which talks about provisions relating to export of goods. Can we start with it? Yes. Okay, so starting with your provisions relating to export of goods. We completed the general provisions ho gaya, import wala provisions ho gaya. Now let's start with export of goods. Okay, now here what are they trying to tell us here? Again, they have spoken it in a very general manner, very broad manner, and only few points have been discussed. Okay, now first one, first thing that they are talking about here is benefits for supporting manufacturers. Okay, now generally they say that whenever we are exporting the goods, the benefit is given to the exporter, the person who is going to finally export the product to the other country. Generally, benefits is given to that. But this exporter who is going to export the goods to the other country, this person has taken help from some local manufacturer. Okay, he has taken some raw materials from the local manufacturer, or he has got something, some part manufactured from the local manufacturer. So that person who has helped the exporter, that person will be called as supporting manufacturer. Okay, that person will be called as supporting manufacturer. Very clear with this? So even that person will be given some benefit under exports, because he has manufactured something, he has given it to the exporter has worked on it, and then that product has been exported to the other country. So can I say ultimately there is some effort involved by the supporting manufacturer also? Yes, so there will be some benefits which will be given to that person also. Very clear with this? And for this purpose, what are they supposed to do? That remember that shipping bill which is required at the time of export, that shipping bill will contain name of both the persons. It will contain the details of the exporter also, and it will contain the detail of that supporting manufacturer also. Very clear with this? Yes. Then next one, second one is something called as third party exports. Okay, now third party exports is something where a particular person has exported the goods on behalf of another exporter. Okay, there was some other person who was supposed to export the goods, but then he directed me to directly export the goods to the other country. This is called as third party exports, and this is also allowed under FTP. And in this case also, name of both the exporters will be present in that export bill. Yes, because benefit will be given to both the persons. Okay, then next one is talking about samples. You remember we spoke about import of samples. Yes, up to 3 lakh is allowed, that seed, bees, etc. is not allowed. Now export of samples is allowed. Okay, no problem. Export of samples is allowed. Remember we studied something for gifts also. Import of gifts is normally not allowed except Rakhi and life-saving medicines. Similarly, export of gifts up to 5 lakh in a financial year is allowed. Okay, export of gifts up to 5 lakhs in a financial year is allowed. MCQ, okay. Sample import 3 lakh. Sample export no limit. Okay, gift export up to 5 lakhs. Then similarly, passenger baggage. When we are going outside India, can we say along with us our baggage also goes to the other country? Yes, so that is called as export of passenger baggage. That is allowed unless specific item is prohibited. Then the next one, import for the purpose of export. Because now there can be something called as merchant exporter. Okay, there can be something called as merchant exporter, means I imported this entire pen. Okay, I imported this entire pen and now I am exporting it. So can we say this is called as import done for the purpose of export? Okay, so for that the product will be specified. Is it freely importable and freely exportable or not? Okay, similarly it can happen for capital goods also. I imported a capital goods from the other country because I wanted to export it as it is to the other country. Even that is allowed. Very clear with this? Acha, then one thing is very important here is, whenever you are importing the goods, okay, can I say you're going to pay the money in foreign currency? Okay, so that will be in freely convertible foreign currency. So please make sure that when you are exporting it, the money is also realized in freely convertible foreign currency. Okay, then only it will be beneficial for us. Are you clear with this? So import for the purpose of export. Okay, I have done the import for the purpose of export, that is allowed, subject to the authorizations required or subject to the restrictions. तो अगर मुझे कभी भी कुछ एक्सपोर्ट करना है और वो एक्सपोर्ट करने के लिए अगर मुझे कुछ इंपोर्ट करना पड़ा तो वो चलेगा. Yes. अच्छा, next one. Check the next one. Here they are talking about payments and receipts on imports and exports. This is a common point. Okay, payments and receipts on imports and exports. Now they are telling that whenever you are preparing any export contract, I have got an export order, I want to export the goods. Okay, you will prepare the documents for that. Export contract will be prepared for that. Now in whichever currency, means either in Indian currency or freely convertible foreign currency, either of the two, please make the contract. Means whatever is the final amount receivable because of this export, that can be determined in INR also, that can be determined in freely convertible foreign currency also. Okay, but whenever you are realizing, make sure that you realize in freely convertible foreign currency. Okay, make sure you realize in freely. See, our one of the main purpose was to earn foreign currency, na. So when you are making the contract, it can be in INR or foreign currency. But when you are receiving the money from the other country, please make sure that it is in freely convertible foreign currency. Acha, in some cases they say that okay, INR also works. Okay, in some cases they say that INR also works, but in most of the cases they say that it has to be a freely convertible, which can be easily converted, freely convertible foreign currency. Yes, so if I tell you here in short, everyone, see this. Can I say when you're preparing the export contract, okay, there can be a question on this. Whenever you're preparing the export contract, it can be in INR or it can be in freely convertible foreign currency. Okay, but when we are talking about its realization, then in that case, it has to be in freely convertible foreign currency. Only in some exceptional cases, it can be in INR. Very clear till here? Okay, then next one, non-realization of export proceeds. Now let's say, for the purpose of doing some exports, you got some benefit. Okay, you got some tax benefit, you got some custom duty benefit, etc. But now you exported the goods, you took that benefit also, but now you're not able to realize the money. Can I say purpose defeated? ठीक है, जिस चीज के लिए हमने एक्सपोर्ट के लिए इतना बेनिफिट दिया, गवर्नमेंट गेव अस सो मच ऑफ बेनिफिट. व्हाई? बिकॉज इट वांटेड टू गेन foreign currency from the other country. So if at all you are not able to realize the money from export proceeds, then all the benefits that you would have got, that will lapse. Means we have to return back those benefits with interest penalty to the government. Yes. Acha, next one is something called as export credit agencies. Okay, now many a times it happens that we need insurances, then we need some bank guarantees, we sometimes need some direct lending also, okay, which we generally get from the banks. Okay, along with banks, there are some credit agencies, export credit agencies, which provide financial support to us. Means what are they trying to say? You simply export, and whatever support you need, whatever help you need, the government is ready to provide. Example, ECGC is there that provides such services. Exim Bank is there that provides such services. Okay, so they are telling that we are ready to do everything for you. We are ready to set up the infrastructure for you. We are ready to give you we are ready to give you tax benefits. We are ready to give you monetary help. Everything is allowed. You simply export. Okay, acha. Then the next one, export promotion councils. Okay, what happened in this export promotion councils? Just try to understand. Export promotion councils, from the name only you will understand promotion. Okay, now these are a group of exporters only who are going to sit and think how to develop, how to increase India's exports. Okay, so they are going to promote the particular products, particular services, particular projects, and because of which the other countries will be attracted. Okay, there is a difference. Above was export credit agencies. It was providing us the monetary help. And this one, export promotion councils, they are going to sit and decide how can we increase India's exports. Yes. Acha, and the last one talks about self-certification of origin of goods. Remember somewhere we spoke about the self-certification in 3-star status house and status and above, we had discussed about this. Okay, normally certification is done by the agencies. Okay, now they are telling that for some exporters self-certification is allowed. Example, if the goods have been manufactured here in India, then Make in India is written, that logo is printed, etc. That can be done by us itself. Okay. This we had done in case of status holders also, right? 3-star and above can do that. So same thing they have repeated. Are you clear till here? Yes. So this was the first part. Okay, this was till here we have done the unit 1 of our FTP, the first part, exactly the half part, or something more than half, that has been completed here. And this was, everything was general. Whatever were the specific things that you need to remember, I have already told you that. Okay, I have already told you that. Are we good to go? Can we start with the next unit of FTP, everyone? Yes. Okay. I need your full attention for the second part. I know you were attentive during the first part also, but for the second part also, I need your full-fledged attention. Yes? Chal. Everyone here on the board, just check. Unit 2, this talks about basic concepts relating to export promotion schemes. Okay, export promotion schemes under FTP. Okay, what we have studied till now is in FTP, it talks about both import and export. But government is obviously going to promote exports more, right? Because that is a place where we are going to earn the foreign currency and our balance of payments will improve there. For that purpose गवर्नमेंट इज ट्राइंग टू एनकरेज, ठीक है, हमको प्रोत्साहन देने की कोशिश कर रही है गवर्नमेंट कि भाई तुम एक्सपोर्ट करो, वी आर विथ यू, ओके, वी आर विथ यू, प्लीज एक्सपोर्ट, यू जस्ट एक्सपोर्ट द गुड्स. Yes, for that we told that government, sir, if we want to export the goods, then we need some benefits from you, sir, we need some incentive from you. Government said, okay, no problem, I am ready with the scheme. Okay, I am ready with the scheme. Now, for that purpose, there are 4 schemes. Okay, everyone here, just try to understand. Now, here they say that in the first one, there is something called as duty exemption and remission schemes. Okay, duty exemption and remission schemes, where they say that there will be 4 schemes in that: duty exemption scheme, duty remission scheme, scheme for rod tap. Okay, we'll see what is that, and then some ROSCTL, one more scheme is there. Okay, now in that just try to understand. Let's start with duty exemption scheme. Okay, what is the government trying to tell us here? Government says that, okay, whenever you are exporting, okay, everyone just try to understand, whenever you are exporting any goods, for that export, if you need to import some raw material, okay, if you need to import some raw material, if you are importing the raw material, you will be paying some taxes on it. Okay, government says that don't worry, we will exempt that tax. Okay, government says that please don't worry, we will exempt that tax. Okay, that is called as duty exemption scheme. So see what is written here. Duty exemption schemes enable duty-free import of inputs required for export production. Okay, within that you have got 2 types. One is advance authorization scheme and one is duty free import authorization scheme, that is DFIA. Okay, within this you have got these 2 types. Then you have got the duty remission scheme, that is nothing but your duty drawback which you have studied in your customs. Then you have got this rod tap, remission of duties and taxes on exported products. Okay, and then last one is not there for our exam, but this is the rebate on state and central taxes and levies as given as notified by the Ministry of Textiles. So this is applicable only for some specific products and this is not relevant from our exam point of view. Yes, so can we start with the duty remission, duty exemption scheme? Can we start with the first type? Yes, if you're able to understand the first one, duty exemption, that is these 2, then the further part will become very, very simple for you. Chal. Now what is happening, everyone here? Okay, duty exemption schemes. In this you have got 2 types. One is advance authorization scheme and the other one is DFIA. Okay, now I'll just give you an overview first and then we can go and refer it from the notes. Okay, so that it will become very, very simple for you. Okay, now for the purpose of, everyone here, for the purpose of advance authorization scheme. Okay, now here what is happening here is, let's say you have got an export order. Okay, one second. let's say you are here in India. Okay, you are here in India. You have got an export order, specific export order you have got from the other country. Okay, let's say you have got this from US. Okay, now government says that okay, if you have got an export order na, then please export. Okay, don't think twice, please export. I said okay, fine, but for this I need some inputs. Okay, I need some inputs from UK, for example. Okay, I need some inputs, I need some raw materials from UK. Government said okay, what's the problem, go and take it. I said first I will have to import it, then customs duty will be applicable, IGST will be applicable, additional custom duty will be applicable, and so on. So many duties will be applicable. I will then import it and then I will export it. Sir, I don't think this will be profitable for me. Government said, don't worry, I will give you exemption from these taxes. Okay, I will give you exemption from these taxes. You please import it and then please export it. I said, okay, sir. Now, because you have given me this authorization, okay, because you have given me this permission, therefore, I will import it and then I will export it. Are you clear with this? Okay, this is called as advance authorization scheme. Means what will happen here is, first you will get an export order, then for that export order you will import the goods on which you will get a duty exemption. This is called as advance authorization scheme. Are you clear till here? Yes. Now let's try to understand its benefits. Let's try to understand its pointers. Okay, now first of all, whenever you are importing, remember I just drew a diagram which said that your import duties will be exempted there. Yes, so here they are telling that your imports under this scheme are exempted from basic custom duty, additional custom duty, education cess, anti-dumping duty, countervailing duty, safeguard duty, transaction product duty wherever applicable, and along with that even integrated tax IGST and compensation cess will also be exempted. So whenever you had imported the goods, okay, at that time if these duties were levied on your products, then you will be totally exempted. Are you clear with this? Acha, in some cases, when you are supplying the goods to UN, etc., at that time, anti-dumping duty, countervailing duty, safeguard duty, and transition duty will not be exempted. Okay, even if you don't remember this exception, that is okay. Normally, you have to remember that if you are coming under advance authorization scheme, then your customs duties and your IGST and compensation cess will be totally exempted. Very clear with this? Acha, for this, can I say two things are very important. You have to bring some inputs from the other country and you have to export it to the other country. Yes, so can I say that person who is eligible to take this particular scheme, that person should be an exporter? Yes, that person should be a manufacturer exporter or a merchant exporter. What do you mean by that? Manufacturer exporter means the person who is manufacturing here in India and then exporting. And merchant exporter tied to the supporting manufacturer. Merchant exporter means what? The one who is providing you some goods. Okay, the one who is providing you some goods. Okay, let's say I am exporting to the other country. Okay, and for that I am purchasing some raw material from our country only. Yes, one example was we were importing, and along with that I need some more goods. I need some more raw materials which I am purchasing from India only. So this person will be called as a merchant exporter. Okay, this person will be called as a merchant exporter. So these people, this advance authorization can be issued. Okay, this can be issued only to an exporter. Acha, when you are going to export pharmaceutical products, okay, at that time this benefit can be given only to manufacturer exporter, means the one who is using the raw material in India and manufacturing the pharmaceutical product here in India only by himself. Okay, so simple, let's keep it very, very simple. That person should be either a manufacturer exporter or that person should be a merchant exporter. Okay, he should be engaged into that particular export. Acha, means he should be doing some export, right? He should be either doing some physical export or he should be doing some intermediate supply, means he is giving to someone and that someone is exporting it to the other country. Okay, or if he is engaged into deemed exports, we will see what is that deemed exports, or if he is supplying some stores, some spares on a foreign going ship vessel or a foreign going aircraft, provided SIAN is given for that. Okay, means there is a foreign going ship or foreign going vessel and I am giving them some stores, means I am exporting because it is going to go outside India, then even that is allowed. For that purpose also advance authorization scheme can be opted by me. Okay, but for the last one, SIAN should be specified. Means if, say for example, if there is a particular vessel, okay, in a foreign vessel there should be, let's say 200 life jackets, for example. So it should be specified in the SIAN that, okay, for one foreign going vessel 200 life jackets are required. Are you clear with this? Yes. Okay, then Acha, now we are exporting, we are doing physical exports or deemed exports, or we are giving it on a foreign going vessel. For this you are allowed to import, but what can be imported? Okay, raw material can be imported which is physically incorporated in the export product. Means whatever, example, I imported refill, will refill be incorporated in the final product? Answer is yes. Okay, so that input is allowed. Okay, then fuel, oil, catalyst for the purpose of manufacturing. Okay, fuel, oil, catalyst, even that is allowed. Okay, and along with that some mandatory spares which is required to be supplied, even that can be imported, but maximum up to 10% of the CIF value of the authorization. Okay, acha, now let's say I want to export fans. Okay, I want to export fans. Along with fans, there are many screws, etc. given as spare also. Hey, you must have seen in shirts, na, extra button is given. Okay, so that way. Those are some mandatory spares or mandatory things that we have to give free along with the final product. Right, so even that can be imported, but value of this is 10% of the CIF value. Whatever you are going to import into 10%, this much you can import extra. Okay, so three things, everyone with me, what three things can you import? You can import the input, you can import fuel, oil, catalyst, and you can import mandatory spares which is required to be supplied with the final product, but this can be imported up to 10% of the CIF value. Clear till here? Okay, so what have we studied? Okay, I have imported these things, I am an exporter, and I am going to do physical exports or deemed exports or intermediate supply, or I am going to supply the stores on the foreign going ship or vessel. Okay, now listen. Now there is something called as pre-import condition. Means here, for the purpose of advance authorization scheme, first you will not purchase. First you will have some export order in your hand. For that purpose you require some inputs. Okay, for that purpose you require some inputs, and those inputs you are importing from the other country. So first what happened? First inputs will happen. Okay, then only you can export it. That same thing only you can export it to the other country. It should not happen that I imported refills. Okay, and I am not using it in my export. No, that is not allowed. Okay, because there is an pre-import condition that whatever you have imported, that should be seen in the exported products. ठीक है, जो भी आपने इंपोर्ट किया है वो आपके फाइनल प्रोडक्ट में जाना चाहिए, क्योंकि ये जो एक्सपोर्ट ऑर्डर आपके हाथ में था, इसीलिए तो आपने एडवांस ऑथराइजेशन लिया और इसीलिए तो आपने गुड्स को इंपोर्ट किया, राइट? अच्छा, in some cases, instead of importing it from the other country, you can even buy it locally. Okay, instead of bringing the refills from the other country, I can even buy it locally. Okay, and that person, can I say he is providing me some support? The person who is giving me the refills from India only, can I say that person is providing me some support? Yes, so even he will get the benefit of advance authorization. Even he will get some benefits. Are you clear with this? Yes? Okay. Then the next one. basis of issuance of advance authorization. On what basis will the government allow you? On what basis will the DGFT allow you to import? Okay, it will be as per SIAN. 1 pen, 4 refills. Okay, so 100 pen, 400 refills. Okay, or if SIAN is not there, then on the basis of self-declaration, I will say that, okay, 1 pen will need 4 refills, so I need that. Okay, or as per the norms fixed by the norms committee, there is a committee called as norms committee, they will fix it. Or on the basis of self-ratification scheme. Self-ratification scheme means, suppose if SIAN is not prescribed, or if there is a genuine reason that whatever is mentioned in SIAN is not proper, or you want something extra. Example, I wanted to make a kurti for triple XL size. Then I know that 3 meter cloth is not sufficient. I need 4 meters cloth. Okay, so there I will go and make an application to the authorities. Sir, I know in SIAN 3 meters is written, but see, this is the reason for which I require 4 meters. Okay, so if there is such a product for which SIAN is given, then refer SIAN. If not, then on these basis, you can take the authorization from the government. Very clear with this? Okay, then there is something called as actual user condition. Okay, actual user condition means if Arpita has gone and taken the permission from the DGFT for importing 400 refills, then Arpita has to import those refills, do the manufacturing here in India and export the pens. Means I have to fulfill my export obligation. Arpita cannot say, okay, now refill has come, now I will not fulfill my export order. No, not allowed. Okay, it is subject to actual user condition, means the person who has imported it. Okay, the person who has imported it, that same person should complete the export obligation. Otherwise, you cannot sell off your refills like that. Imagine मैंने refill मंगवाया और उसके बाद में now I am sitting like this. Okay, I will not export. No, that is not allowed. Okay, that is not allowed. So, acha, now let's say I imported refills and after that I exported the final product. Now I have some balance refills left with me. That cannot be disposed of. Manufacture pen from it and sell the pen locally. That is okay. But you cannot sell the raw material. Are you clear with this? So see, what are they telling us here? Advance authorization, first of all, it is subject to actual user condition. I have to fulfill it. Okay, that is not transferable even after export obligation. Acha, but I am the authorization holder. I will have the option to dispose of the final product manufactured. Now let's say I brought 300 meters. Okay, I'll write it there in the notes. I'll write it here. Everyone here. I imported 300 meters of cloth. Okay, for how many kurtis? For 100 kurtis. Okay, now I could prepare full 100 kurtis out of 280 meters of cloth. Possible? Yes, there is some saving, so that is possible. So can I say now I am left with 20 meters of cloth? Yes. Can I sell this 20 meters of cloth? Answer is no. You cannot sell because this was your duty-free import. You cannot sell it here. Acha, but out of this 20 meter cloth, let's say for example, I manufactured 6 more kurtis. Can I sell these 6 kurtis? Yes, this can be sold locally and normal taxes will be applicable on it. Are you clear with this? Yes. Acha, now suppose if there is any waste or scrap, important point. Suppose if there is any waste or scrap which is generated out of the manufacturing process, can we dispose it of? Obviously, we are not going to export it. Okay, so yes, it can be disposed of here in India only after payment of required, on payment of applicable duty. Okay. So what are they trying to tell us here, you know? That if you have taken permission for making, let's say 100 kurtis or 100 pens, please import proper raw material for that. We will give you the tax benefit there and then you can export it. And you have to export, you have to fulfill the export obligation mandatorily. Okay, acha, ma'am, what if we don't fulfill the export obligation? Then whatever were your duties saved, whatever was your basic custom duty, IGST, countervailing duty, CVD, etc., whatever was your duty saved, please pay it. Then we are okay with it. Right? Acha, now who can opt for this scheme? Ma'am, exporter can opt, that is okay. But can all exporters opt for this scheme? Answer is no. Okay. Now, an exporter who holds AEO certificate. Remember Authorized Economic Operator certificate? They were those trusted people under customs. Yes, who holds AEO certificate, that person can opt, or any status holder who holds a valid 2-star or above. 2-star or above status holder and who has submitted its application for grant of AEO. Okay, means he is already a 2-star holder and he is also going to get the status of authorized economic operator. Either that person is already an AEO or that person is in the queue of that AEO. These people can go for advanced authorization scheme. So ma'am, what about other people? What about 1-star person, or what about a person who is not having AEO, etc.? For them, other schemes are applicable, but they cannot go for advanced authorization scheme. Are you clear with this? Acha, is it mandatory for the DGFT to give me authorization? Answer is no. It is DGFT's thought process whether to give me the permission or not. Are you clear till here? Yes? Okay. Then going on to the next one, something called as value addition. Okay, something called as value addition. Now here they are telling that it is very, very simple, because you are importing something and after that you're going to export this thing outside India. So can we say we should be earning some profits out of this? Yes, so there should be a minimum value addition of 15% which is required to be achieved. Okay, so whatever is your CIF, okay, whatever is your CIF value of inputs plus any other inputs that has been used, okay, so whatever is your cost plus 15% at least, that should be your FOB value. Okay, then only it will be beneficial for our country. Achha. Now many a times it happens that foreign buyer to whom we are going to export, that person provides us something free of cost to be incorporated in the product. Okay, I'll give you an example here. Everyone, just try to understand. Okay, now I wanted to export shirts. Okay, for which I needed cloth. So I decided to import the cloth. Right? Normal example. Okay, now I will import the cloth, then I will manufacture the shirt, and then I will export the shirt. Right? Now, the person who is sitting in the other country who needs these shirts, that person has sent me the buttons. He wants some special buttons to be put on that particular shirt. I said, okay, fine, you send it to me. I cannot make those buttons of your name, etc. Please send it to me. He said, okay, I will send it. Now, I am giving you a numerical example. Just try to understand. Okay. Now, I imported cloth worth 90 rupees. Okay. Very simple, very basic example. I imported cloth worth 90 rupees. Okay. Notional value of the buttons that was provided free of cost to me is 10 rupees. Okay. So, for the purpose of value addition, my CIF will be considered as 90 plus 10. Okay, just for the purpose of value addition. I know my cost was only 90 rupees, but for the purpose of value addition, this will be considered as 90 plus 10, that is 100. So now my FOB, my selling price should be at least 115. Yes, my selling price should be at least 115. Are you clear with this? Yes. Now, I'll give you one more example. Okay, similar example. Now, CIF of actual inputs, cloth, CIF of actual inputs is equal to, let's say, 90. Okay, buttons received free of cost is equal to 10. Okay, selling price of shirt, export price, FOB of shirt is equal to 105. Can you tell me whether I have fulfilled the condition or not of value addition? Have I fulfilled the condition of value addition or not? Okay, ma'am, please simplify. Okay, now what are they telling? Whatever you have got free of cost. Okay, whatever you have got free of cost, that is to be added in the CIF also, and that is to be added in FOB also. Oh, okay, right. Okay, now listen. What is my cost? In our simple language, what is my cost? Can we say it is 90 plus 10? Notional cost is also to be added. So my cost is 100. Okay. Now, what is my FOB? Actual money that I'm going to receive is 105. But even 10 is to be added in this. Okay. Because even that will be exported. So my actual selling price for the purpose of this value addition is equal to 115. Have I fulfilled the value addition condition? Have I fulfilled the value addition condition? Answer is yes, because there is a difference of 15% over cost here. Are you understanding this, everyone? Yes? Okay. So whatever is given to me free of cost, that will be added at both the sides, left hand side also, right hand side also. Acha, now, in this advance authorization, there is a concept called as annual requirement. Advance authorization for annual requirement. Now, I told to the government that, sir, first I will receive the export order, then I will go to the DGFT for authorization. Okay, next time again I will receive an export order, again I will come to you for the advance authorization. Sir, you do one thing now, give me permission for 1 full year now. Give me permission for annual requirements. Sir, for full year I want to import the raw material now itself, sir. At least give me the permission, sir. They said, okay, fine. We can give you this permission for annual requirements so that you don't have to run again and again. We can give you this permission, but only for items which are notified in the SIAN. A normal advance authorization was for SIAN also and for self-certification, self-ratification also. But if you want it for annual requirement, then you will get the permission only for items notified in the SIAN. Are you clear with this? I said, okay, sir, no problem. My thing is anyway notified in the SIAN. He said, do you have a track record? Okay, because if we are giving you permission to bring duty-free goods, it is bad for the country. It is bad for the taxes, right? So I asked the exporter, government asked the exporter, do you have any track record that you will actually export the goods? He said, yes, sir, I have got the track records for the last 2 years. I have got export performance for the last 2 years. I have been exporting for the last 2 years. He said, okay, fine. Then let's do one thing. So I asked the government, sir, can I import whatever I want for 1 full year, whatever quantity I want, can I import? Government say, no, there will be a restriction. I asked the government, sir, how much then? How much will you allow me? How much will you allow me to import under this annual requirement? So government said that will be 300% of the FOB of exports done in the last year. Okay, in the preceding financial year, whatever was your export FOB into 3 times basically, or 1 crore rupees, whichever is higher. Last year, whatever export you had done into 3 times value, or 1 crore, whichever is higher, this much you can, for this much I can give you advance authorization for annual requirement. If he says, now what if I need more? Then you go for normal authorization. But this much I can give you at once. Okay, provided he has a track record for the last 2 years. Are you clear with this? Yes. Okay, so this is just done. This annual requirement thing, this is a separate point altogether actually. This is just done so as to give that person some relief so that he does not have to run again and again to the government. Yes. Acha, now listen. Now since he has got the authorization, can I say he has got the permission for doing the import? This permission will be valid for a period of 12 months from the date of issue. Means what? Once he has got the permission to do the import, he has to import it. He has to import those goods within a time period of 12 months. If not imported, you can get one time extension of 12 months. Once in a life, you can get an extension of another 12 months for importing it. Are you clear with this? Yes, are you clear with this? Acha, now, can we say this same benefit? Is also available for deemed exports also? Now, just one simple example I will give you for deemed exports. Okay, one simple example. Now, there is Mr. A. Okay, he is the exporter. He wants to export it to US. Okay, he wants to export it to the US. Can we say advance authorization is available to Mr. A? Yes. Now, there is one Mr. B who is here in India. Okay, exporter is also here in India and Mr. B is also here in India. Now Mr. A wants some inputs. He is not importing the inputs, but he is taking from me. Can I say I am giving my goods to Mr. A, which will be ultimately exported to the other country? Yes. So I will be purchasing the inputs. Right? I will be purchasing the inputs. Are you clear with this? Yes. And or I will be manufacturing the inputs and I will be providing to Mr. A. On that, I will be charging some taxes. Right? So in this case also, benefit of advance authorization is available. Means we can take it from this person free, means duty free. Right? But in this case, check the validity. Validity of advance authorization for supplies under deemed exports shall be coterminous with the contracted duration of project execution. Can I say there will be a contract between Mr. A and Mr. B that you have to provide me the inputs for the next 14 months? Example. Yes. So what is the validity of this? 14 months or 12 months from the date of issue of authorization, whichever is later. So whatever is our contract period or 12 months, whichever is later. Achha, and what if Mr. A is importing it? Then it has to be imported within a time period of 12 months. Are you clear with this? Yes. Achha, this was for the purpose of import, that you have to import it within 12 months. Okay. Achha, after importing, can I say you are required to manufacture it and you have to export it to the other country? That was the main purpose. That export obligation should be fulfilled within a time period of 90 days from the date of clearance of import. Means when you had imported your consignment, raw materials, from that day within a time period of 90 days, within a time period of 90 days, you have to export it. Very fast, very quick. Are you very, very clear with this, everyone? Yes. Okay. And another thing, drawback will be available. Now let's say you paid taxes. Okay. Normally we know that you, if you are going for advance authorization, your taxes are exempted. But let's say you paid some taxes. Then later on, can I say this is a loss for you? Because ideally benefit was available to you. Tax exemption benefit was available to you. But what you did was, you by mistakenly, you paid the taxes. No problem. Later on you can take the duty drawback. You can take the refund. Very clear with this? Yes. And then below that you have got some general points, common points, which is there for both the schemes, which we can do it later. Are you clear? Yes. So I'll just summarize this entire scheme. Yes, what happened in case of advance authorization scheme? In case of advance authorization scheme, you are an exporter. You are going to export the goods to the other country. Okay, for which you need to import some raw material or you need to domestically purchase some raw materials on which tax is a burden for you. So you decided, you went to the government, sir, please give me the authorization that for these goods, tax is exempted for me. Government said, okay, no problem. If you are a AEO or if you are a 2-star export house and in the process of AEO, then we can give you this benefit. I said, yes, sir, I am an AEO. I am a part of AEO. Government said, well and good, no problem. Please go further and import your raw material and it will be duty free. Government said, okay, now you have got the permission. Please import within a time period of 12 months. Further extension of another 12 months. And once you have imported, please export it within a time period of 90 days. This is the benefit of authorization. And in this, one more extra benefit was given for annual requirement. Government said, do you have a track record of last 2 years? I said, yes, I have. Government said, okay, no problem. Up to a certain limit, 300% of the FOB of the last year's export or 1 crore, whichever is higher, this much authorization I can give it to you. You can start importing so that you don't have to come to me again and again. Very, very clear till here. Yes, simple. Okay. Now going on to the second part of this tax exemption scheme. Okay, second part is talking about DFIA, duty free import authorization scheme. Duty free import authorization scheme. Okay, now in this scheme, first of all, those who do not fall under advance authorization scheme, means that AEO people, etc., apart from those can come for this duty free import authorization scheme, but provided those people are generally engaged in exports. Okay, for this purpose, you had an export order on hand. Okay, you had an export order pending with. In this case, you generally keep on exporting. Okay, you generally keep on exporting the goods. So you generally need inputs. Okay, now see what is happening here. Duty free import authorization. In this scheme, you will just get the benefit of basic custom duty. In the previous one, it was basic custom duty plus other custom duties plus integrated tax plus cess. Here you're getting the benefit only from basic custom duty. We are playing safe. Government is playing safe. Benefit only from basic custom duty, provided you are a merchant or a manufacturer exporter. You have to be an exporter. Okay, you have to be an exporter. You are doing physical export or intermediate supply or deemed export. No supply free on the foreign going vessel or ship. Normal export you are doing. Okay, for that purpose, can we say for that purpose we will require inputs? Yes, so in that case we can import inputs, oil and catalyst. Fuel is not allowed. Inputs, raw material can be imported, oil and catalyst can be imported, and tire is not allowed. Import of tire as the raw material is not allowed. And these things you can import. And see the next most important difference. There is a post export condition here. Okay, there is a post export condition. Means what? DFIA shall be issued on post export basis. Once you have exported, okay, once you have exported some goods, after that you can approach the government and say, sir, I need duty free import authorization. I'll tell you, I'll explain you, don't worry. Okay, here what happened? In the first one, what happened? In this one, you had an export order on hand. You first imported the goods and then you exported the same thing. But in the second one, what happened? First export the goods and then ask for duty free import authorization. Okay, now listen. Ma'am, if you're telling first it has to be exported, means I would have imported some raw material. Till now I don't have DFI. Okay, till now I don't have DFI. First I imported, I paid taxes on that, I exported. Okay, after export you are telling me ask for DFI. Then what is the point? Government said, dude, what did you tell me? That you generally keep on exporting, na? So I am giving you DFI. Please import the goods, use it for your next export order. I said, huh. Okay. So I will use this DFI for the next export order because I am generally engaged in the business of export. Did you understand the difference between the two? Yes. What happened in the first one? In the first one, import, no duty. You did the manufacturing, you exported. This happened in the first one. What happened in the next one? In the next one, you first normally exported by paying duty on the inputs. Okay, then you asked for DFI. Then you imported. Now use this inputs for your next export. Are you clear with this? Yes. Okay. Then, this scheme, this DFIA is applicable only for SIAN notified products. Remember, in advance authorization, it was SIAN or on the basis of declaration, but annual requirement was only for the purpose of SIAN. Annual requirement was only for SIAN products. Okay, DFIA is also applicable only for the SIAN product, for which SIAN has been notified. Okay, now actual user condition, another point of difference. See, what was there in actual user condition? Means if I am importing the inputs, I have to manufacture it and I have to export the final product. Mandatorily I have to do, it is not transferable. But no DFI for inputs with actual user condition. Means what? DFIA cannot come with actual user condition. Means DFIA is transferable. Okay, which also means that DFIA is transferable. I got the DFIA from the government. I don't want to export. I transfer the DFIA to you. You can now take the benefit of duty-free inputs and you can export. That is allowed. Means same person importing and exporting is not required. And same product importing and exporting is not required. Did you understand? I'll give you one more example. Everyone here, see. in case of DFI, okay, let's say first I am required to export. Okay, for the purpose of this export, I have already imported. Okay, for this purpose, I have already imported the goods. This is over. Okay, after this export, I go and take the DFI. Okay, and let's say export of 100 shirts. Okay, for this, I would have imported the cloth on which I would have paid the duty also. Right, now I come to know, okay, I can go for DFI. I go for DFI. Okay, I go for DFI. They tell me that, okay, you can import cloth. I said, okay, I will import cloth. But what will I do with this cloth? Use it for your second export. Can I say I got this cloth, I got this DFI because of the first transaction, but I am using it for the second transaction? Same product going out? Answer is no. Because I imported this cloth by showing export of this 100 shirts. But now I am exporting some other type of shirts. No problem. It is not necessary that this input should match with this export. But that was necessary in case of advance authorization. Remember, the raw material should be physically incorporated in the final output. Here it is not required. Are you clear with this? Yes? Okay. Achha, who is eligible? Same, exporter or merchant exporter. Here there is no AEO, etc. Points coming in. Okay. Here value addition 20% instead of 15%. There it was 15%. Here it is 20%. Achha, here annual requirement thing is not applicable. Okay. It is totally not applicable. Nothing like that is available. Okay. Why? Why is annual requirement, advance authorization for annual requirement not applicable? Because here they are telling that first of all, there is no actual user condition. Yes, and another thing is here, since you're generally engaged into exports, whatever inputs you want, you can take it under DFIA and you can use it for future exports. Okay, so here there is no scheme, no requirement, no annual requirement given. Acha, now in how much time are you required to import? Once I have got DFI, then this DFI is valid for a period of 12 months. Okay, this is valid for a time period of 12 months. Means I have to import the inputs within a time period of 12 months, and here there is no extension. In the previous one there was 12 months plus 12 months. Here it is only for a time period of 12 months. Okay, and once you have got the DFI, then export, after that the export shall be completed within a time period of 12 months from the date of online filing of application and generation of file number. Now listen, just try to understand something that is really, really important. Okay, I'll just correlate it with advance authorization. Okay, what happened in case of advance authorization? You got the advance authorization. Okay, advance authorization was issued on, let's say, 1st Jan 2021, for example. Okay, then you have to import the goods within a time period of 12 months. I'm not taking any extension, so you have to import it before 1st Jan 2022, right? And once your consignment is clear, let's say consignment got cleared on the same day. Okay, not on the same day. You have to import before so and so date. Your consignment got cleared on, let's say, 1st Feb 2022. Okay, your cargo got cleared on so and so date. So from this day, within a time period of 90 days, you have to export. Okay, this 90 days will be when your cargo is clear. This is in case of advance authorization, because same thing which has been imported, that should be exported. Okay, now see what is happening in case of DFIA. Okay, just try to understand what is happening in case of DFI. They say that whatever is your date, first you will apply for DFI. Okay, let's say I applied for DFI on 1st Jan 2021. Okay, DFI got issued on 1st Feb 2021, for example. Okay, then they are telling that what is the validity, within how much time I have to import, what is the validity of DFIA. What is the validity? 12 months from the date of issue. 12 months from the date of issue means, can I say it will be 31st Jan 22? 12 months from here. Yes, but what are they telling? By when your export is supposed to get completed? By when is your export supposed to get completed? It should get completed. Everyone here, one second. Your export should get completed within a time period of 12 months from the date of online filing of application. Online filing of application 12 months means, can I say it should get over by 31st December 2021 itself? Means which is earlier, import is earlier or export is earlier? Here the export is earlier. Means you can import it a little later also, but please make sure that you complete the export obligation. Okay, why? Is it necessary that same input should go in that export? Answer is no, it is not necessary that the same input should go in export. Okay, irrespective of your inputs, your export should go on. Are you clear with this? Yes. तो DFIA के अंदर क्या बोलने का कोशिश किया है? आपका तो एक्सपोर्ट्स वैसे भी चलता रहने वाला है. Your exports are anyway going to go on. Okay. So we are just giving you a benefit in between that whatever you are importing, okay, that will be duty free from basic custom duty. That will be duty free from your basic custom duty. So we will give you import authorization plus, but please don't stop the export. Export should continue, and it is not necessary that whatever you have imported should go in the next export consignment only. No, it will be used later on also, or it can be used later on also. जो input आ रहा है duty free उसको फिर कभी use कर लेना, लेकिन exports चालू रखो. Very clear with this? Yes. So these dates are very important here. Okay. Okay. Acha, then they have given you some restrictions, prohibitions, etc. There can be a list of items which are prohibited, list of items which can be restricted, list of items which can be traded only through STE. Okay, so that list you have to adhere, and then only you can get the authorization. Then along with that, this one. Acha, can you also take the inputs domestically? Can you also take it from India? Yes, that will be considered as deemed exports for that person. Okay, the person who is giving me and then I am exporting, for that person it will be considered as deemed export. So benefit will be available for that also. And whatever money you are realizing, okay, whatever export proceeds you are realizing, that should be in foreign convertible currency normally, or in some cases it can be in INR also, no problem in that. Are you clear with this? Yes. And see, here they have given just final comparison. Advance authorization, first one was not transferable, but DFI is transferable. I can transfer it to someone else also. Advance authorization, 15% value addition. DFI, 20% value addition. Rest calculation remains the same. Okay, so if you're not falling under advance authorization thing, then you can go for your DFI. But for coming under DFI, you should be a normal exporter, or I can say you should be a regular exporter. Clear till here, everyone? Yes. Acha, another biggest point of difference. In case of advance authorization, you get benefit from many taxes. But in case of DFI, you get benefit only from basic custom duty. Yes. Okay. ओके सो ये अपने दो स्कीम्स हुए, ठीक है. एक तरह से एक ही स्कीम और ड्यूटी एग्जेम्पशन स्कीम, एडवांस ऑथराइजेशन एंड DFI, बट वी कैन से वी हैव कवर्ड अप टू schemes here within it. And yes, one question that you can expect here is differences between the two schemes and similarities between the two schemes. So mainly the differences between the two schemes, please be ready for it. Okay, can you list down a few points of differences for me? Yes, in case of advance authorization, it is available only to the specific AEO category and second 2-star and above, plus has applied for AEO certification. And whereas this one is available to every exporter. Then 15% value addition, 20% value addition. Then after that, first one is not transferable, second one is transferable, and in first one you get benefit of so many duties, and whereas for the second one you get benefit only from the basic custom duty. Very clear till here? Yes, chalo. Now let's go to the next one, everyone. Second scheme, that is your duty remission scheme. Okay, or we can call it as a duty drawback scheme. I'm not getting into detail of this. Duty drawback, as you already know, it is only of the custom duty. It is kind of refund of the custom duty. It does not involve your GST. It does not involve your IGST and compensation, cess, etc. No. So whatever whatever is your duty paid, okay, or whatever is your customs duty which is paid on the imported material, if that has been paid by you, okay, then that will be refunded back to you in case you are engaged into exports and all those things. Okay, obviously duty drawback is a very big topic which is already covered in our customs. So just remember here, for the point of view, this duty drawback is only of the custom duty. There is no refund that you're getting for the purpose of GST under this scheme. Yes. Section number 74, 75 of the Customs Act. Then going on to the third scheme. Third scheme is also important. Third scheme is also simple. Both important and simple. Okay, so scheme for remission of duties and taxes on exported products. Okay, means here, what is this ROTEP? What is this ROTEP trying to say? ROTEP says that if there is any other law, okay, if there is any other law where you are not getting the refund of the taxes paid, okay, if you are not getting refund of the taxes paid on the products that you are exporting now. Okay, now let's say I want to export something, okay, for which I have purchased some raw materials domestically, okay, and on that there is some local taxes which have been levied. Okay, let's say there is some garbage tax which has been levied, there is some municipal tax that has been levied. I don't get benefit of these taxes anywhere, but can I say ultimately I've exported this product, so I should be getting some benefit out of it. Yes, so I will get refund. I will get refund of these taxes which are anyway not available under any other provisions of the law. Very clear with this? So see, what is the objective of the scheme here? Duties, taxes, levies at central, state and local level, which is borne on the exported product, which I have actually borne on the exported product, including the indirect taxes on goods and services used in production of the exported product. Okay, means the product which I have exported, that was manufactured. Okay, at the time of manufacturing, I have borne some taxes on it. Okay, and when this product got manufactured, after that I have to distribute. For selling, I have to do the sales and distribution expenses. At that time, if there were some taxes levied, I will get benefit of those taxes. Okay, so one important thing here is manufacturing is must. Okay, manufacturing is must. Okay, now ma'am, how will we get the refund? In what was happening in the previous two schemes, we were not at all required to pay. Okay, in the first, the advance authorization and DFI, it was totally exempted. We were not at all required to pay. In duty drawback, you will get the refund back. Okay, or you will get an exemption as per your customs law. Acha, here what will happen? Whatever amount they decide to give you as refund. Okay, it's not that whatever actual amount of taxes you have paid, that much amount you will get. No. Okay, see how much benefit first of all you will get. Rebate would be granted to eligible exporter at a notified rate, some percentage of the FOB value. Means you would have exported the goods, uska FOB value into a particular percentage. Percentage is not there now for the purpose of our syllabus. Percentage of FOB. This much amount of rebate you are going to get. So ma'am, how will we get this refund? Will we get a cash refund of it? No. Okay, this will be transferred in your electronic ledger, customs electronic ledger, in form of transferable duty credit or e-scrip. Means it will come in the form of credit in your customs electronic ledger. So ma'am, can I encash it later on? Answer is no. You have to use that money to pay basic customs duty. Later in future, sometimes you will import the goods. At that time, basic custom duty will be applicable. Use these credits to pay that basic custom duty. Ma'am, what if I am not at all engaged into imports? I am a make in India person only. no problem. These duty credit scripts are freely transferable. You can transfer it to any other person. Are you clear with this? Okay, fine. Acha, now listen. Now I said to the government, sir, I'm purchasing books as my raw material, and there is no tax on it. I purchased books 100 rupees. This is my raw material. There is no tax on it. My purchase value is 100. And then I used this and I exported the goods. Sir, in this case also, will I get the ROTTEP benefit? Government said, did you pay any tax at the time of purchasing the raw material? I said no. So government said, then tata bye-bye. In this case, you will not get any benefit of ROTTEP. When will you get the benefit of ROTTEP? Only in case where you have paid some taxes or where you have borne any taxes. The product, the raw material that you have purchased here is anyway exempted. So in that case, you will not get any benefit of ROTTEP. But I said, sir, rebate so you are giving on the basis of export value, not on the basis of this. So government said, so what? We are giving you the benefit on the condition that you have borne some duties on it. Are you clear with this? So the rebate under the scheme shall not be available in respect of duties and taxes already exempted or remitted or credited. If you have already got the benefit, then you will not get any extra benefit under ROTTEP. Are you clear with this? Yes. Okay. Then the government said, okay, fine, we will give you the benefit in the form of e-scripts and all that. I said, okay, sir, you give me the benefit, I will export. Okay. Then government asked me after some time, will you realize the money within FEMA time limit, the export proceeds, because that is very important. I said, no, sir, FEMA time limit is already gone, lapsed, but I am not able to realize the export proceeds. Government said, then this is a loss for our country. You exported the goods, you are not able to realize the money, and I gave you tax benefit also. So in that case, all my tax benefits will be gone. Means I have to refund it back to the government. Very clear with this? Government can easily take it from your credit ledger. Okay, or if you have already utilized it, for payment of basic custom duty, it will recover in other manner. Understanding this? Yes? Okay, then next one. Ineligible supplies, items or categories under ROTTEP. This is one such list where ROTTEP benefit is not available. I'll tell you few points that you have to remember here. Okay, first listen to me, everyone here. Now, can we say ROTTEP will not be available to a trader? Because ROTTEP was available only for taxes which we had borne at the time of manufacturing. So it is not available to a trader. Okay. Second one. Goods exported through transshipment, high seas. ROTTEP benefit is not available. Why? Because there is no manufacturing done here in India. Right? Then any such products which are prohibited or restricted under FTP. Means government doesn't want you to export such goods. Then government will not give you ROTTEP benefit also. Okay. Any such product for which government has set a minimum export price or a minimum export duty. Means government says that this product should be exported at minimum so and so value. This one should be minimum realized. Means government is not so much interested in exporting that particular product. That's why it has set a minimum price that should be realized from the other country. So government says on these products we will not give you ROTTEP. We don't want you to export such products at all. Are you clear with this? Okay. Next, deemed exports. Deemed exports means I have given it to the exporter and exporter has given it further. In such cases, ROTTEP benefit is not available. You will get other benefits. Deemed export benefits separately will be available, but ROTTEP benefit is not available. Okay. Then any products which are manufactured in customs warehouse, that is tax exempted, no ROTTEP benefit available. Okay. Any other, if you have got the benefit of advance authorization, or if you have got the benefit of DFI, then in that case, you have already got the benefit of duty exemption scheme for those duties, then ROTTEP benefit will not be. Are you clear with this? So, few points I am marking for you. Okay, a few points, everyone here. First of all, like a trader. Okay, then transshipment. Then minimum export price or minimum export duty was kept. Then goods which are restricted or prohibited under FTP. Then deemed exports. Then goods manufactured in customs warehouse. Okay, then advance authorization DFI available. At least remember these many points. For these pointers, what type benefit is not available. Especially remember the manufacturing and the trader point. Basically, it is available when the manufacturing is done here in India. There have been some taxes levied on such products. Some taxes which have been levied on such products for which you have not yet got the benefit. Clear with this? Yes. Okay. So 4 schemes in all, actually 3, but total 4 schemes done till now. First one, advance authorization, where you get the benefit of so many duties. Second one, DFI, benefit only from basic custom duty. Third one, duty drawback, refund of customs duty. Fourth one, rod tab, where you get the benefit of local taxes which have been paid. How much is the amount of benefit that you get? Some percentage, okay, some percentage of the FOB value of exports. Simple. Okay, then let's go to the next one, and technically the last scheme, everyone here. Yes, very, very important. Now, here they are talking about export promotion capital goods scheme. Okay, export promotion capital goods scheme, EPCG scheme. Okay, till now, whatever we studied in advance authorization, DFI, what were we importing? We were importing the inputs, the raw material, we were importing fuel, oil, catalyst, and in this side we were importing oil and catalyst, etc. Did we talk about importing capital goods from the other country? Answer is no. We did not talk about importing of capital goods. Okay, so here, what did I tell to the government? Sir, if I want to import a machinery, which I want to use for manufacturing some products, which I am going to export, then sir, what about the taxes and duties on the machinery? Government said, your point is valid. So I said, sir, please give me some benefit now. So government said, okay, fine, no problem, no problem. Without paying duty on import, you can import it. Okay, zero customs duty at the time of import. Either you can import it, at that time you will be saving the customs duty, or you can purchase it from a local person, domestically purchase the machinery, then also I will give you the benefit of notional taxes saved. I said, okay, fine. But government said, if I am giving you this benefit now, then you have to fulfill the export obligation. Why are you importing this machine? I said, I am importing this machine because I want to make some goods and I want to export it. Government said, okay, please remember to fulfill the export obligation. I said, I will fulfill the export obligation. Government said, okay, no problem. You can import the capital goods at zero customs duty. I said, well and good. Now, for that, I have to be an exporter. Okay, I can be a manufacturer exporter. Either I will manufacture here and then export, or I can be a merchant exporter tied to the supporting manufacturer. Means I am providing some goods and then that person will sell it ahead, or I am a service provider. These people are eligible under EPCG, and for that you can import so and so capital goods. Capital goods, any capital goods. It can be in completely knocked down condition, it can be in semi knocked down condition, any capital goods. Computer systems and softwares which are a part of the capital goods which are being imported, spare, molds, dies, jigs, etc., catalyst, etc. Okay, these things you can import, and they have even given you the definition of capital goods, and they have written it is not relevant from exam point of view. Okay, so please don't invest time on it. So capital goods you are investing, you are importing without any taxes. Now see what are they telling. Capital goods imported under EPCG authorization for physical exports are also exempt from IGST and compensation cess. Means if you are going to export the goods further, made out of this machine or made out of these capital goods, then in that case zero custom duty and IGST and compensation cess also you will be exempted from. I was like, I'm very happy. I'm super duper happy. Okay, I'm super duper happy because I don't have to pay it. Okay, now I'll come to this part later on when we take the numerical example. Okay, I will take this later on. So as of now, what we have understood, Till now what we have understood is, if I go to the government and if to the DGFT and if I say that, sir, I need some capital goods for the purpose of manufacturing products which I'm going to export. So I need some tax benefits from you. Government said, okay, fine, zero custom duty, no IGST, no compensation cess, you can import, but make sure that you fulfill the export obligation. I said, okay, fine, no problem. Okay. Achha, now this EPCG authorization you can get only after approval. Okay, you cannot do it directly, you can get it only after approval. And yes, there is an actual user condition. Means whatever machinery, whatever capital goods you have imported, you cannot transfer it to anyone else. Please make sure that you first fulfill the export obligation. Until that, you cannot transfer this capital goods to any other person. Okay, once you have got the permission for importing it, make sure that you import that machine within a time period of 24 months. Import is to be done within a time period of 24 months, no extension allowed. Right? Acha. Instead of importing, can I even purchase it locally? Answer is yes. It is allowed, no problem. Okay. Acha. Am I required to fulfill any export obligation? 100%. Otherwise, why will it, give me tax exemption? Now, something very, very important mathematical calculations coming up every 1 year. Now, export obligation means obligation to export products which is covered by the authorization. Okay, means you have to export a particular value of goods. Now, how much is the authorization? Or how much is your obligation? You have to make sure that you fulfill an obligation equivalent to 6 times of the duties, taxes and cess saved on capital goods to be fulfilled in 6 years. Total, cumulatively, to be fulfilled in 6 years from the date of issue of authorization. The date when you got the permission, from that day, make sure that your exports is equal to 6 times of the taxes saved. 6 times of the taxes saved. This much you have to export. Then this person said, okay, sir, no problem. I am anyway engaged into export. I will be able to fulfill this particular obligation. Then DGFT told me, dude, import under EPCG shall also be subjected to average export obligation. Means what? Means you have to fulfill 2 obligations. One is average export obligation and the other one is specific export obligation. Sir, then what was that 6 times of the taxes saved? Government told that is specific export obligation which you have to fulfill because you are importing a capital good. आप कैपिटल गुड्स के लिए हाँ बोले, आपने कैपिटल गुड्स क्यों मंगवाया, आपने कैपिटल गुड्स क्यों इंपोर्ट किया? Because you said you are going to export. So export. How much? 6 times of the taxes saved. I said okay. But you also have to make sure that you're fulfilling some average export obligation also. Sir, now what is that? So government said, anyway you were engaged in the business of export now. So export normally should go on irrespective of the fact that you're bringing this machine. अभी तक भी तो आप एक्सपोर्ट कर ही रहे थे, तो वो तो कंटिन्यू रखना ही है. And over and above your average export obligation, you have to fulfill specific export obligation. I said, sir, how much average export obligation? They said, take the average exports of the last 3 years. Average exports of the last 3 years, that much should be done during the next 6 years also. So during the next 6 years, can I say 2 obligations to be fulfilled? One is 6 times of the taxes saved and one is average export obligation. I said, okay, fine, no problem. I will try to fulfill. Government said, if you don't fulfill, then whatever taxes was waived off on that import of capital goods, that you have to pay back. Okay, let's take a numerical example of it, everyone. Yes? Okay, now listen. I got the authorization. Okay, I got the authorization on, let's say, 1st April 21. I have to fulfill the export obligation for a period of 6 years from the date of authorization. Means let's say 6 years, na? So let's say this is year 1, this is year 2, this is year 3, this is year 4, this is year 5, and this one is my year 6. In these 6 years, I have to fulfill some export obligation. I said, okay, fine, no problem. Okay, how much specific export obligation I have to fulfill? 6 times of taxes saved. I said, okay, fine. Okay, now let me take an example here. Okay, I'm complicating things now. Everyone, just try to simplify. I imported some machinery on which import duty, custom duty, basic custom duty is equal to, let's say, 1 lakh. Okay, IGST and compensation cess is equal to another 1 lakh. For example, total 2 lakhs. Government told me that I will waive off. Government told me I will waive off this 2 lakhs. I said, okay, fine. So how much is my taxes saved? 2 lakhs into 6 times. My specific export obligation will be 12 lakhs in the next 6 years. Right? This much I have to fulfill. Now, next thing, I realized import duty. Okay, everyone here. Import duty is equal to 1 lakh. IGST is equal to 1 lakh. I told to the government, sir, you don't give me the benefit of IGST. I will take the credit of the same. You just waive off this 1 lakh. I will pay this 1 lakh and then I will take the credit. So you will say taxes saved is equal to 1 lakh into 6 times of taxes saved is equal to 6 lakhs. So my export obligation is only equal to 6 lakhs. Government said, dude, this 1 lakh is also a taxes saved, na? Why? Because you have taken the credit of the same. Right? So government said your specific export obligation is equal to 12 lakhs, which you have to fulfill in the next 6 years. Okay, no problem. Acha, along with this specific export obligation, I also have to fulfill average export obligation. Average export obligation is last 3 years. Last 3 years ka average. Take the average of last 3 years. That also you have to fulfill along with this. Are you clear till here, everyone? Yes. So this is what is given here. So the 6 times thing is to be fulfilled in a period of next 6 years. Acha, now another benefit, 2 benefits that they have given to us here is, suppose if I have purchased this machinery from India only, domestically purchase also possible, then they say that you have to complete the average export obligation, and in specific export obligation, your obligation will be 4.5 times of the taxes saved. Earlier it was how much? Earlier it was 6 times if you are importing the machinery, but if you are purchasing the machinery domestically, then it is good thing for India because you are promoting the purchases from India. So specific export obligation is equal to 4.5 times instead of 6 times. Very clear till here? Yes. And last benefit. Okay, see what are they trying to say. I'm changing the color so that you can identify the differences. Now they are telling that if you are able to fulfill your average obligations, and if you are able to fulfill 75% of your specific export obligation in less than or equal to half period, total period was 6 years. If you are able to fulfill 75% of this or this within a period of less than or equal to 3 years, then balance obligation will be waived off. Means you need not fulfill the balance obligation. Okay, 75% of specific export obligation, but 100% of average export obligation. 100% of this and 75% of this. If you are able to fulfill in how much time? In less than or equal to 3 years, till 3 years, then balance obligation, that is balance 25% obligation will be waived off. This is written here. Check here. 75% or more of specific and 100% of average is done within a time period of less than or equal to 3 years, then the balance will be condoned, waived off. Very, very clear with this. Yes. And in case of domestic, what will be, in case of domestic purchase, what will be your taxes saved? The taxes saved will be with reference to notional custom duty. The custom duty which has been saved, right, by purchasing it domestically. I hope I am very, very clear with this EPCG scheme, everyone. Are you with me? Yes. Should I summarize this entire EPCG scheme? Yes. First of all, EPCG stands for Export Promotion Capital Goods Scheme. Okay. In this, either you can import some capital goods or you can domestically purchase some capital goods. That capital goods you will use for manufacturing of the products and then you will export it. Export those goods. Okay. Not the capital goods. You will export your final product. So government says that, okay, when you are importing the capital goods or when you are domestically purchasing the capital goods, at that time you can do it at zero custom duty, zero GST and zero compensation cess. Okay, but for that purpose you have to fulfill an export obligation. Two types of export obligation. What is that? One is average export obligation, that is average of the last 3 years export that you have to continue for the next 6 years. That average should be there for the next 6 years. That much of export should be done during the next 6 years. And in specific export obligation, whatever taxes you have saved into 6 times, this much obligation is to be fulfilled in a period of next 6 years. I said, okay, fine. Acha, what if I purchase the machine domestically or the capital goods domestically? Then they said, no problem. Whatever is your notional taxes saved multiplied by 4.5 times, this much specific export obligation you have to meet. I said, what if I meet this early, that is within a time period of less than or equal to 3 years? Government said, no problem. Meet 75% of the specific export obligation and 100% of average export obligation in less than or equal to 3 years. I will waive off the balance. Are you clear till here? Yes. Okay. Done. Let's go ahead, everyone. So I'll just show it to you, everyone, on the board, how the numbering is done. Okay, 1 second. Let's go to this page where we started with our part 2 of the chapter. Yes, here we had done this numbering. Numbering 1, duty exemption and remission scheme. In that we did first duty exemption scheme, in which we had 2 schemes. Second one was your duty drawback, B. C was your road tax manufacturing, yes, of other taxes. And last one is for that Ministry of Textiles, that is not relevant for, that is not there for our syllabus basically. Okay, this was the first part, that is duty exemption and remission schemes. Okay, now I am going to, second thing that we did was our EPCG, Export Promotion Capital Goods Scheme. Okay, check the numbering of that. Check the numbering of that scheme. Can you see this? That is the second one. Okay, this is your second one. Now I am going to the third one, that is after this EOU, EHTP, STP and BTP. I am going to this new one. Okay, these are also some benefits. Okay, these are also some benefits given to us. Can we start, everyone? This EOU, EHTP, STP, BTP, then the next thing, last one, a deemed exports, that is going to come next. This is just a one-time read, but we'll just do an overview of it. Okay, last 2 concepts will be done. Okay, then EOU, EHTP, STP and BTP. First of all, full forms of all these things are given there. EOU stands for Export Oriented Unit. EHTP stands for Electronic Hardware Technology Park Scheme. Okay, STP stands for Software Technology Park and BTP stands for Biotechnology Park. Okay, now what is so special about these people? Okay, SEZ is not covered under FTP, that's why we are not taking it here. Now, what is so special about these people? Now, the units which are set up in EOU, EHTP and all these things, these people have committed Okay, these people have committed that they are going to export their entire production. Whatever they are going to produce, except for some proportion which can be sold in DTA, which can be sold domestically, something is permitted, but apart from that, majority of their produce is going to be exported. So can I say these are actually the real units which are contributing to India's export? Yes. So can I say these people should be given some benefits? Yes. So objective of these schemes is we have to give some benefit to these units which are located in export oriented units and all those things. Okay, now let's try to understand what are the benefits given. Okay, what are the benefits given and when are you eligible for these schemes? First of all, these people, if they want any inputs, okay, they can either import it or they can procure it locally also. Okay, no problem. And whatever, either they are importing or they are purchasing it locally, they can do it without payment of basic custom duty, without additional duty, without IGST and without compensation cess. Purchase करते वक्त custom duty, IGST, compensation cess नहीं लगेगा. First benefit that they have already got. Okay, similarly on self certification basis they can also import capital goods, no problem in that. Okay, now the one who is supplying the goods to EOU, if I am supplying the goods to EOU, who is going to exempt? So this transaction will be called as deemed export because my goods are ultimately going outside India. I will get the benefit of deemed exports. Are you clear with this? Okay, acha. If at the time of any type of such purchase on which CST is applicable, central sales tax is applicable, they will get a refund of that. Okay, they will get a refund of the CST. Ideally, CST refund is not allowed, but these people will get CST refund of that. If a central excise duty was levied on any goods, they will get a refund of that also. Okay, some licenses is required, some industrial licenses is required. They are exempted from that also. Their export proceeds should be realized within a time period of 9 months because you are exporting. So this is all we want from you. Please realize the money within a time period of 9 months, and whatever you have got, you can keep it in EEFC account. Okay, exchange earner foreign currency account. You need not give exchange it with the bank, etc. You can keep it in the EEFC account. Acha, bank guarantee at the time of import not required, exemption. Okay, 100% FDI investment allowed. Foreign direct investment 100% allowed. Just like your SEZ. These are the benefits. So can I say at the time of import and purchases, your taxes got exempted, your customs and GST got exempted, your CST refund you have got, yes, your excise refund also you have got. Only condition is please realize the money within a time period of 9 months. Forex you can keep it in EEFC account, no problem with that. Are you clear with this? These are the benefits that you will be getting if you are coming under EOU, EHTP, BTP schemes and all that. Okay. Acha, another condition is you should be having net positive foreign exchange earnings. Okay, net means your receipts. Obviously, your receipts should be more than your payments. Positive foreign exchange earnings should be there. Okay, and for setting up an EOU, your application will be considered by this committee or by this board called as Unit Approval Committee or Board of Approval. This committee will consider your application. Means whenever we want to get the status of a EOU and so on, you have to go and make an application to them. They will see whether there is a minimum investment of 1 crore in plant and machinery or not. If yes, acha, sometimes they can even lower down this limit for you, but normally this is the limit. If you have done this much of investment and if you give that self declaration that maximum of your or all of your production is going to be exported, then you will get the status of EOU. Okay, acha, EOU to EOU transfer, is that allowed or not allowed? That is allowed, no problem. Okay, but if that second EOU sells it domestically, sells it to the DTA, pay the taxes. Okay, because the chain has got broken here. Acha, can we exit from the scheme? Yes, you can exit. Okay, but whatever taxes benefit you have got, please repay it back. Acha, can I convert my unit into DTA? Yes, but punishment applicable. Pay the taxes because till now you have got the benefit. Can DTA get converted into EOU? Yes, welcome. Fulfill all the criteria and you are welcome. Are you understanding this? Yes, so these are some of the benefits, glimpses of the benefits, I should say, given to the EOU and the other persons. Why benefit is given to them? Because they are going to export their entire production. Yes. Okay. And then the last one, that is your deemed exports. Okay. What happens in case of deemed exports? Deemed exports is basically benefit given to the persons who are sitting in India so as to compete with the foreign suppliers. Okay. Now just try to understand everyone here. Let's say there is an exporter. Okay. There is an exporter who is going to export the goods to US. Okay. For this purpose, I need some inputs. I need some raw material. I have two options with me. Okay. First option is I can import. Second option is I can procure it locally. Okay. If I was importing, I was getting the benefit of AA, DFI and all that. Okay. But if I procure it locally, then I was not getting any benefit. Okay, then I was not getting any benefit. So what they said was, let's treat these two at par. Okay, can we say if this exporter is procuring it locally, ultimately Indian goods are going to the exporter and exporter is exporting the same goods to US. So even this transaction is considered as deemed exports. Can we say DTA is selling it to an exporter? Even that transaction will be considered as an export transaction. Or can this person even be an EOU? Yes. So this DT is selling it to the EOU who is ultimately going to export it. Even this will be considered as deemed export. Can I say we are saving, if we are procuring it locally, can I say we are saving some foreign currency? Because at the time of import, we have to pay the foreign currency. So money saved is equal to money earned. Okay, money saved is equal to money earned. So even these people should be given equal importance. These people should be given equal weightage. Very clear with this? Yes. Okay. So that is the purpose for this deemed exports. Now just try to understand. Deemed exports is there for the purpose of GST also. Deemed exports is there for the purpose of FTP also. As of now, we are restricting our discussion for the purpose of FTP only. Okay. So see what are they telling us here? It refers to those transactions in which goods supplied do not leave the country. Okay, goods supplied do not leave the country and payment for such supplies is received either in Indian rupees or free foreign exchange. Supply of goods as specified in FTP shall be regarded as deemed exports. Means when I am giving, when this local person is giving it to the exporter, is it leaving the country immediately? No, it will leave later on, but as of now it is not leaving the country. Achha, then deemed exports broadly covers three areas. Okay, I'll also refer it here. First of all, supply of goods against advance authorization or advance authorization for annual requirement or DFIA. Okay, you remember we had studied about manufacturer tied to the exporter. Yes, so can this person give it to the exporter who is ultimately going to export it? Yes, this person had that advance authorization or this person had DFI. He had got two options, either to import or to procure it locally. So supply by me. Okay, let's call this person as Mr. A, who is the local person. Supply by Mr. A to a person who is holding AA or DFI. Okay, this is called as deemed export. First one. Okay, supply of goods to units located in EOU. I am giving it. I had written here already. I am giving it to a EOU. Mr. A is giving it to a EOU. Even this will be considered as deemed export. Okay, and supply of capital goods against EPCG authorization. Now this person, this exporter wanted capital goods. What two options did he have? If he wants capital goods, either he can import it or he can procure it locally. So if I am giving capital goods to that particular person, even that will be called as deemed exports. Okay, Or if, now these, the things which are written on the right hand side, these are some specific things. Okay, if I have supplied some goods to mega power projects, or if I have supplied some goods to the UN, or if I have supplied some goods to nuclear projects through some international bidding, etc., even that is deemed, okay, even that is considered as deemed exports. So what you can do is, you can just remember the left hand side here. First of all, we are local person is giving it to a person against advance authorization, etc., or we are giving it to a unit located in EOU, or we are giving it to a person who is having EPCG authorization. Then this will be considered as deemed exports. Okay, and what is the benefit of deemed exports? What are the benefits of deemed exports? Then in that case, what is the benefit? In such cases also, it will be considered as if it has been imported. Okay, for this person, okay, for this person it will be considered as if it has been imported. Remember, in EPCG, that person will get the benefit of notional taxes saved, so that benefit will be available to the exporter. Okay, and what is the benefit available to this person? What is the benefit available to this person? For this person also, it will be called as exports. Okay, so export benefit will be available to such a person. Acha, then check what are they telling. Deemed export shall be eligible for all or any of the following benefits in respect of manufacture and supply of goods which are qualifying as deemed export, subject to the terms and conditions. First one is advance authorization. Now, when this local person is selling the goods to this exporter, even though the goods are not leaving the country, then too it will be called as export. Okay, for that purpose, even Mr. A even Mr. A can take the advance authorization from the DGFT, and he can say that I want to export the goods. Even though the goods are in India only, then too he can call it as export. So he can get the benefit of advance authorization or DFI. Right? Acha, next he can also get some deemed export drawback. Okay, means refund of the duty drawback which was paid on the imports. Say for example, if he has purchased something on which he has already paid the taxes, on that he can get a drawback which is claimed at some specific rates, all industry rate or brand rate basis. He can submit the documents, and on whatever taxes he has already paid, uska refund, that's refund of that particular thing can be availed by such a person. Right? And last, if any excise duty has been paid by him, even that will be refunded to that person. Very clear with this? Yes. And yes, here there should be no third person involved. Means if I am giving it to that exporter, or if I am giving it to the unit in EOU, or if I am giving it to that EPCG person, I have to give it. Third party should not give it. Okay, direct transaction should happen in such cases. Similarly, if I am giving it to the nuclear power projects, or if I am giving it to the UN, or if I am giving it to any other things which are written, I have to directly give it to them. There should be no third party involved in that. That is given here. Are you clear till here? Yes. So mainly in schemes, when I talk about advance authorization, including the annual requirement, DFI, ROTEP and EPCG, these four schemes are very important, which you have to remember, especially in case of EPCG, the export obligation, that average export obligation, specific export obligation, that is specifically very important. Yes, I hope you have understood the entire chapter, and this was all about your FTP. Yes. Okay, we have a few questions. I have taken a few questions here. Let's try to answer them. Okay, distinguish between, okay, this was an exam question. Distinguish between advance authorization and DFI. I think we have already discussed about the distinguishes. We had listed down also. One more point that we can add up here in the answer is the difference in the taxes. Okay, in DFI, another benefit was available. In advance authorization, another benefit was available. Next one, enumerate the various matters in respect of which policies and regulations are framed under FTP. For what all things are mentioned under FTP, basically, you can mention about all the schemes, then general provisions regarding import and export of goods. Okay, then you can also mention about the status holders. Okay, then you can mention about that committee which was formed for trade disputes and quality complaints. Okay, this was a mock question. Then next one, enumerate the privileges of status holders. I had done this and we had remembered 5 points also, right? One was clearances was available on self-declaration basis. Sign will be fixed within a time period of 60 days on priority. Okay, documents submit through bank is not mandatory. Negotiation of documents through bank is not mandatory. Bank guarantee is not required. Yes. Then another thing was 2-star and above can establish their export houses. 3-star and above can do a self certification, and we can export freely export. We can like send some goods out of India on free of cost basis. Right? That was some benefit available. Then after that, what do you understand by the term foreign trade policy? So the first thing that we had studied, foreign trade policy was a policy or guidelines or a set of guidelines which was issued by the central government in regards to import and export of goods in India, right? And which is the governing legislation. You already know, central government, Ministry of Industry and Commerce, FTDR, DGFT, regional authorities, and which government authorities administer FTP in India. So that was administered by the DGFT, means we cannot go above DGFT. DGFT administers it, and 3 other authorities who were helping us, that was your CBIC, RBI and state GST departments. Then as per FTP, goods of value not exceeding in a licensing year may be exported as gift 5 lakh rupees, right? Then monotype traders want to enter into export contracts with various customers. It intends to understand the currency denomination while entering into the contract. So while entering into the contract, we had studied contract can be made either in INR or freely convertible currency, but we have to make sure that export proceeds are realized in freely convertible currency, but in some cases rupees INR is also allowed. Then the next one, Jigsaw Puzzle has imported inputs having CIF value of 25 lakhs without payment of duty under AA. Inputs are supplied free of cost, valued at 5 lakhs to meet the eventualities of quality issues arising during manufacture. Okay, I got something free of cost. We had done a numerical question also on this. On manufacturing, the products are supplied to SEZ and realized in Indian currency. Jigsaw Puzzle wants to know whether it is entitled to AA scheme and what should be the minimum value addition. Okay, it is supplying to SEZ units, it is selling to the SEZ units, and you are required to compute the FOR value or FOB value for supplies. So in this case, so can we say since physical export has been done to units in SEZ, even that will be considered as an export. So advance authorization scheme will be available. In this case, there should be a minimum value addition of 15%. How will we calculate this 15%? 25 lakhs into 115% or 30 lakhs into 115%? Yes, it is going to be 30 lakhs because we have to add that free of cost value. So 34,50,000 should be your FOR value. Very clear with this? Yes. Then next one, briefly explain as to how FTP is linked with custom laws. I had given you the example. FTP is closely knit with the customs law. Yes, but policy cannot override the custom law. Policy is a broad thing. It is going to give the basic intent of the law, but later on everything depends upon the words or the language which is used in the custom law. Then next one, with reference to the provisions of FTP, discuss whether it is true or false. If any doubt arises in interpretation of any provision of FTP, the said doubt should be forwarded to CBIC. No, it will be forwarded to DGFT. Then authorization once claimed. Okay, authorization once claimed by an importer cannot be refused by DGFT. Oh, no, obviously it can be refused by the DGFT. IEC is a 12-digit PAN. No, 10-digit. Then waste generated can be freely disposed in DTA on payment of applicable custom duty. Yes, because we are not going to export the waste, so it can be disposed of here. Okay, then Mr. A has brought a laptop from USA with him. Such laptop has been used by Mr. B, the seller, few months there. Second-hand laptop, electrical items, capital goods. Restricted, subject to authorization. So yes, it requires authorization, so it cannot be imported freely. Then Import of samples. What did we study for import of samples? Import of samples is normally allowed up to value rupees 3 lakh, but samples of that defense security items, seeds, bees, and new drugs, these are totally prohibited. Then salient aspects of advance authorization for annual requirement. Okay, if I don't want to go to the DGFT again and again, and if I have a track record of export for the last 2 years, then I can import my inputs on annual basis. How much is the maximum amount allowed? Last year's export into 300% or 1 crore, whichever is higher. And then the last one, briefly explain duties. Okay, briefly explain duties which are exempted in case of imports under advance authorization. Okay, so basic custom duty, additional custom duty, education cess, anti-dumping duty, countervailing duty, safeguard duty, transition product specific safeguard duty, wherever applicable, IGST and compensation cess. This was the entire list that was exempted then. Yes, and in some cases you will not get the benefit of that anti-dumping duty, countervailing duty, etc. Simple? Done? Yes, done. I hope this was very, very, simple for you to understand. Let me know in the comment section if you liked the lecture. Thank you so much.